Hello and welcome to the September 9th, 2025 meeting of the Governmental Accounting Standards Board. Great to see everybody here in Norwalk. Excited for our board meeting this week. And we are going to jump right into it with revenue and expense recognition. But first, we do have to approve the minutes from our last meeting, which was August 21st, 2025. If I don't see any discussion on the minutes, do I have a motion to approve them?
So moved.
Second.
Thanks, Diane and Robert. All in favor, say aye.
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 Any opposed? Hearing none, minutes are approved, and we can get into revenue and expense recognition. Pam, please start us off.
All right, thank you, Joel. So the team has prepared 3 papers for the board for today. We're going to be discussing 2 broad topics, one being further discussion of the measurement of progress toward complete satisfaction of a performance obligation, topic you've been discussing the last couple of board meetings, and also 1 paper related to measurement. So with that, I'm going to turn it over to Kara, who's going to take you through the first paper.
Thank you, Pam, and good morning, everybody. At our July 2025 meeting, the board began deliberations on measurement of progress. And at that meeting, the board made the tentative decision that input methods could be relied upon as a method to measure progress. The purpose of this paper is to facilitate the board's discussion on whether output methods could be relied upon as a method to measure progress. And we also provide a discussion regarding whether alternative methods, those methods other than inputs or outputs, could be relied upon to measure progress as well. And the last topic of the paper, we will discuss how governments would select a method to measure progress. As a blanket statement for all the board discussion questions in this paper, task force members who provided feedback on paper 1 generally agreed with the project staff's recommendations. To analyze whether output methods could be relied upon as a method to measure progress in the government environment, the project staff considered examples using various types of outputs that could be representative of the transfer of control of distinct goods or services to the customer over time. And in the paper, you saw examples of an interlocal fire agreement in which the output was based on the number of emergency responses. There was also an example of construction of new infrastructure where the output method was a survey of work completed. The paper also addressed the use of milestones. And while we do believe that project milestones could be used as an output method to measure progress, we are careful to note that milestones might not always be representative of the transfer of control if the milestone timeframes are too widely spread. This is because when the transfer of control occurs over time, that transfer of control is in essence occurring continuously. So therefore, if milestones are spread far apart and a government is measuring progress as each milestone is completed, this may result in delayed recognition. And we illustrate this point in the paper using an example of a state university constructing a new research facility, and we provided examples of both widely spread milestones as well as more narrow milestones. In addition to the discussion of milestones, we also note that there can be other circumstances in which outputs may not adequately represent the transfer of control. And so a government will need to exercise judgment to make the determination of whether output methods are suitable. For instance, a customer may enter into a binding arrangement in which the seller provides one deliverable to a customer, and the transaction does meet criterion C for overtime recognition. And the criterion C is when a seller is creating an asset that does not have alternative use to the seller, and the seller has right to payment for performance completed to date. That transaction meets criterion C when the customer controls the goods or services as it's being created. However, they do not have physical possession of a deliverable. And in this case, the project staff believes that output methods of deliverables produced by the seller would not be representative of the seller's progress of performance because the deliverable to the customer is a single output at completion. And therefore, there's not a feasible way to rely on outputs to measure progress. So in summary, We do believe that in certain circumstances, output methods can be representative of the seller's progress of performance, and therefore we believe it can be relied upon to measure progress for revenue and expense transactions. Unlike the input method regarding expense transactions, we do think that the government would have information available about the seller's output, and therefore it would be more applicable for expense transactions. So board discussion question 1, does the board believe that output methods could be relied upon to measure progress towards the complete satisfaction of a performance obligation in revenue transactions? And the project staff recommends that it could be.
Thanks, Kara. Board member responses? Chris?
So I agreed with the staff recommendation. I did not get my formal comments to the staff, and I apologize for that. But you'll find that I found that these 3 papers, specifically this question, and I will get into them, but it seems like the ebb and flow of the process is to where we're dealing with some very, very straightforward, at least in my eyes, concepts here. And so this makes absolute sense that you would allow for this output method, and we'll go on to the other questions. But I saw no reason to disagree with the recommendation.
Thanks, Chris. Robert?
I also agree with the staff recommendation. Maybe Chris just hit it. Why I'm going, wait a minute, am I missing something here? Maybe it's because it is straightforward. I did send a note to Pam. I think, as was evident, Kara sort of talked about, I think output methods obviously I think would be more applicable on the expense transactions, but I don't see why they couldn't be relied upon from a revenue transaction standpoint, given the caveats that certain things, particularly the last example on using, if you had a transaction that's using criterion C. So I think that I would support the staff recommendation.
Thanks, Robert. Diane?
I agree with staff recommendation, and I think the output method is important. I think it especially works well for criterion A, where a customer is simultaneously receiving and consuming the present service capacity. I think for B and C, it could be harder to use the output method, but I do think we need to have it as an option out there.
Thanks, Diane. Jackie?
I also agreed with the staff recommendation. I agree that the output method probably isn't going to be all that commonly used for revenue transactions, but I don't really think that it's in our best interest to limit options that are available if they're feasible. So I think providing as many options for recognition as possible or for measurement as possible makes sense. So to me, allowing the output method made perfect sense. It won't be used a lot, but there will be situations where it's probably the most appropriate method to use.
Thanks, Jackie. Carolyn?
And I agree with the staff recommendation. I think when possible, it could be the very best option, which probably will not be a great majority of the time, but when it is possible, why not have it as an option to use?
Thanks, Carolyn. Jeff?
Yeah, so I I agreed here. I did sort of note the discussion in the paper about milestones versus continuous recognition, right? Like that to me was, I mean, in theory, I know the staff said, well, you can't have them too far apart. You can't have them. That's a difficult, I think, and that will be a difficult concept to communicate, because I do see, and I think FASB had in their discussion, right? Like, well, they had a discussion of what the flaws in it is, because if you're assuming it's a continuous recognition pattern, how do you stick milestones in there and have it continue to be continuous, right? I sort of think there's something about percentage complete and how this is going to work, but that was something that I think will be a little bit tricky. The other thing I noticed is in the description, in the FASB description about the output method, they flat out say, and I guess this is because I've been sensitized to this term by Paulina over the many years, is output methods recognize revenue on the basis of direct measurements of the value to the customer. And so when I see the word value to the customer, right, like the hair on the back of my neck goes up, right? Like how, so in theory, I agree, output methods make sense. They may have their place, and especially in expense transactions, how we choose to describe that. Are we going to describe it in terms of value, or are we going to just try to describe it in a different manner? I think is something for the staff to sort of contemplate.
Thanks, Jeff. I agree with the staff recommendation. I think largely outputs is probably the most appropriate method, but it's just not always going to be the easiest one, right? And I kind of lean back into my comments from the input methods last time that, and we'll get to this in question 4, but really it's about picking the best one. It's not kind of getting hung up on whether it's inputs, outputs, time, whatever it is. Let's pick the best one, the one that makes the most sense. And that ultimately is, I think, the right answer. And then, but I think outputs being a potential one of those that could create that best method certainly should be an option that's provided.
Question 2 is, does the board believe that output methods should be relied upon to measure progress toward complete satisfaction of a performance obligation in expense transactions? And the project staff recommends that it does.
Kira. Question 2 on expenses. Jackie.
Well, because I agreed with it on revenues, I'm going to agree with it on expenses too, because of the idea that symmetry is important. We've allowed symmetry in the past. And for the same reason as an option, or when we talked about it for revenues, I don't believe we should limit options. I think we should make as many options available that are feasible, and they should be allowed to select the most appropriate for the transaction they're dealing with. So to me, it makes sense that we're allowing the input and the output method for both revenue and expense transactions.
Thanks, Jackie. Diane.
I agree with staff recommendation. I think in an expense transaction, the government probably has more information about the outputs and when they're taking transfer of control. So I think it makes sense. And again, like Jackie said, let's keep the options out there. If it's something that can be used and makes sense, then we definitely want to have that as an option.
Thanks, Diane. Carolyn.
And I just said I agree with the staff recommendation for a lot of the reasons that both Jackie and Diane have expressed.
Thanks, Carolyn. Chris.
I also agree. And, this answer kind of was bled into in the last question as well, where, a lot of my fellow board members mentioned the expense transactions and why it makes sense there. So I won't repeat, but I agree.
Thanks, Chris. Robert.
I concur with my fellow board members in agreeing with the staff recommendation.
Thanks, Robert. Jeff.
I concur with Robert's concurrence.
Thanks, Jeff. I agree. Same reasons I agreed with question 1. I don't think there's a difference here. I did want to, your example, one of the examples in the paper just kind of made me think about a question that's maybe not totally related to this, but maybe it's kind of food for thought moving forward. And maybe this isn't the right time to ask it. And if so, you could tell me. But when I think about the example of building a bridge, like construction, and I think about inputs or outputs or methods, I kind of, my experience with these construction projects is that construction company measures their progress to date. And they get some engineer that certifies and stamps it and says, yep, I agree, we're 40% done with this bridge. And then the government maybe has their own engineer that's kind of going out to the project site and says, yep, I agree, and signs off on the invoice, says, yep, this is 40% done, and then they pay the 40%. Is that a bridged method? Is that something that's going to qualify for a bridged, or why wouldn't it? And would retainage play a part in that, or?
I would think so. I think because of the timing, and it can be pretty interesting. I think some of the conversations we had in the last meeting with input methods, we were discussing issues like materials delivered. So if the company purchases the materials and goes and delivers to the site, there's a lumpiness in the transaction, and then the retainage causes a delay in the payment or the value transfer. Sorry, had to tease Jeff in there. And so those kinds of things can create to not being able to be in the shortcut method. And so the measurement in progress would be important. And in those circumstances, I think as both Jackie and Diane alluded, the outputs method is going to be fairly difficult to use because the output is, I think you said, a bridge. So you have one bridge. So do I wait until the end? No, you agree that is transfer control to the progress. So most likely you're going to have to go to the inputs, which is how many widgets have you installed, how much of the foundation is done, 40% of the foundation, 30% of the materials, whatever it's done. And so that's how it gets done as a measurement of progress.
Okay, just thinking about people applying this and all this. I doesn't mean I certainly didn't disagree with these. I just was interesting.
But no, you made a very
conversations.
interesting point because the shortcut method generally in the FASB side is alluded as the invoice method. So that's their formal name for the shortcut. And so if the invoice conveys the value received, then you can recognize based on the invoice. And so we would have to think about whether that could potentially fall into, because the progress invoicing represents the proportion of work to perform.
Yeah, I mean, to me, in my experience, it does kind of fall into it. Retainage is the part that I wasn't sure.
Well, but
that
retainage
would
still
do, but-
gets recognized as an expense and a payable, right? I mean, on a normal day, I think. And so
Yeah.
you're still reporting the appropriate expense. And if you were in the revenue side, you would still have a receivable outstanding for a period of time, but you still have a receivable. So you might be able to,
Okay.
it may be
It's
applicable.
Just thinking, just throwing things out there.
And in Joel's example of the bridge, right? If the government's having the bridge built for it, are we thinking that it's the output method, right? Because the government sees the progress made, versus if the government were the bridge builder, would we then say it's more of an input because those things that are now going in to make the bridge are inputs to making the bridge? Whereas if you're on the expense side, you're seeing the outputs going in to make the bridge, right?
So remember that when we were discussing the inputs method, we also mentioned that there are circumstances in which the government may have sufficient information of the vendor's input and be able to use it. I think this is going to be one of those because those construction invoices are very detailed. They're going to write line item by line item of what they have done and how much of that thing of the line item is done. And so therefore you would have, as the government receiving the bridge, information about the inputs of the vendor. And so you could potentially rely on the same methodology on both sides, regardless.
If my binding arrangement was for design and construction, are those separate are those separate performance obligations?
Depends on the facts and circumstances, but because they're interrelated and you would have a design that is useless without construction that can happen without design, it's highly likely that it would be considered a bundle of a single.
Okay.
Because of the interdependency of the components.
Makes sense. Okay.
It's probably more complicated when you get to design, build, maintain, operate, finance. Right. No, I know. No.
P3s, right? You know,
Because I was
94.
no, I was going there. There's a bit of P3s. You don't get there, but that would be more complicated if it was. But it's not. Thankfully,
It's
it's
a
not.
94 issue.
Yeah, exactly.
Sorry, I didn't mean to tangent. It's just getting the juices flowing here this morning. So sorry to interrupt, Kara.
So the next topic is the project staff considered whether methods other than inputs or outputs could be used to measure progress. The first item we re-looked at was time elapsed. We included time elapsed as an input method in the paper presented at the board to the board at the 2025 meeting. And we did this because in the context of that transaction in which a seller provides the availability of service to the customer, we viewed time elapsing as an input which results in an output of availability of service. And this was in the context of a monthly rail pass. However, the project staff acknowledges that this may not be the only assessment of a railway pass, the railway pass availability of service. We found other views that inputs to this transaction are labor hours, machine usage, and fuel that lead to an output of availability of the railway service. And while measuring progress can be achieved through the passage of time in this case, time elapsed is viewed as neither an input nor an output. So the project staff believes that time elapsed can be used as a method to measure progress without having to associate it with either an input or an output method. But we would note that time elapsed would not always be representative of the measurement of progress for all performance obligations in which a binding arrangement has a finite or defined period. Rather, time elapsed can be relied upon as a method when the pattern of transfer occurs evenly. In addition to time elapsed, given the diversity of binding arrangements in the government environment, the project staff believes that governments may encounter circumstances in which, in their judgment, neither input methods nor output methods provide the most representational depiction of the transfer of control of distinct goods or services. And if those circumstances arise, the project staff believes it would be necessary for governments to develop their own methodology to measure progress, as long as that method developed is representational of the pattern of transfer of control. So board discussion question 3, does the board believe that methods other than inputs and output methods could be relied upon to measure progress toward complete satisfaction of a performance obligation in revenue and expense transactions, including time elapsed? And the project staff recommends that other methods could be relied upon.
Thanks, Kara. And you said early in your presentation, task force members agreed with everything in this paper or all the papers?
Paper 1.
Just paper 1. Okay, thank you. Diane.
I agree with the staff recommendation. I think this is like the discussion about the outputs. We need to offer that if there's alternative methods that governments can use that make sense, we need to let them use their own judgment. I think the example of the time elapsed is a really good example. It may not be used a lot as far as alternative methods, but I think we do need to offer that.
Thanks, Diane. Jackie.
I agree with the staff recommendation with what Diane said. Again, I think that we should allow the most representative method for measuring performance obligation satisfaction. And if that isn't inputs or outputs, but something else, then they should be allowed to use that, including time lapsed.
Thanks, Jackie. Chris.
I also agree. And just to feed off of Jackie's comment, there's so many different types of performance obligations and the ways that organizations will structure them, and allowing that flexibility to kind of follow in line with that performance obligation. If it makes the most sense, just seems like it makes sense to me. So I agree with the recommendation.
Thanks, Chris. Carolyn.
I agree. I agree. I agree. This is an available option. If it is the most representational method of the options available. So I agree with the staff recommendation.
Thanks, Carolyn. Robert.
I agree with the staff recommendation primarily because it's previously stated by other board members supporting allowing flexibility and for governments to apply the principle.
Thanks, Robert. Jeff.
I guess I support, but with hesitation, because I hesitate because, if you look at the FASB guidance, they're pretty cryptic about alternative methods, right? They say broadly it's input and output. And the ways you can measure includes input, but they don't really talk about other methods, right? They don't specify any other methods. And I don't know of any other methods, right? So if a government were to say, we approve this guidance, and so, hey, Jeff, what alternative methods are you talking about? What other ways other than inputs and outputs can we use? I don't know, right? So I think that's a little bit hard because to not have examples, at least ones in my own head as to these alternate ways to do it. That said, I agree that the world of binding arrangements, it's got a lot going on. So I don't want to forestall the ability to come up with another method. I just hesitate if I don't know what that method is and if I indeed find it acceptable or not, right? I do agree to make time elapsed sort of its own thing, and I don't view that as an alternate method, right? But rather, I found it confusing, right? When I looked and I said, "Hey, that's an input method," and "Oh, hey, that's an output method too." I think that's a little confusing, and I think time elapsed is unique enough that maybe it can be described as its own thing, not necessarily as an alternate method, but as its own method or way of, measuring the progress. But that's where I came out.
Thanks, Jeff. Yes, Paulina.
So one of the comments I wanted to make, if you spotted in the basis of conclusions of that bit of the guidance, the FASB struggle with similar issue, at least is written in the basis, where they also didn't want to, as you have noted in the entire conversation, lock down to two methods and go, okay, just because I couldn't come up with very specific other methods, I also don't want to lock the door. And so just be aware that that was part of that flexibility that you guys are aiming to achieve, because of the potential of an input method or an output method didn't work for a specific binding arrangement that the government may encounter. They may need to develop their own, but then that's the importance of the next question that CARE is going to be proposing, is it does have some guardrails. So I appreciate your hesitation, but it's not also a free flow for all.
Yeah, I mean, because it's also the case that, and I'm not criticized, but flexibility comes at a cost, right? If I tell governments you got to think about these other ways out there to approach this, I'm asking them to think about another way out there that we haven't articulated as to how to approach it. So that flexibility comes at a cost, right? So if we think the cost is worth it because we think, alternatively, for example, we could be silent, right? And then somebody comes to us and says, hey, I don't have an input or output method that works. Here's my method. And we do an egg question that says, yeah, that method is acceptable. I'm not saying that's the way we should do it, but I'm just saying as we think about this, as we layer on alternatives, we have to be thinking about the complexity that we bring about by allowing that flexibility.
Yeah, but I don't think of it as this added cost imposing them a government the burden to identify. I mean, they have two specifically defined methods. It's given them an alternative when they look at the input method, the output method, and the time elapsed, and they go, it doesn't work. Now what? And so as opposed to going, oh, you just go on your own and come up with your method, it's more you looked at one, you look at two, you look at three, and things didn't work, then you're going to have to come up with something. And so it's the added cost when they have entered into a binding arrangement that includes a performance obligation that may be a little bit harder to work through than the cookie cutter methods. And so I don't view it as a cost.
And when you say it that way, like when it's approached, like you go through the articulated methods, and if it doesn't work, then I agree with you, right? Then you're at the same place as you would be in my other example, right? Because then it's like, as opposed to just laying out a menu of, it's more like the approach, like go through these, and if these don't work, think about alternatives, as opposed to, here are your 4 alternatives. One of them is this alternate method that we're not articulating for you, right? To me, it's like a little bit different in terms of how I would think about it when I was approaching it.
So I thought I knew my answer until Jeff just said what he said, or maybe what he heard you say. I had viewed my answer to really all the questions in this paper, but in particular these last two, I essentially answered him last meeting when we talked about inputs, because at the time, and this is a little bit of a bent on what Jeff said, maybe it's not a cost to preparers, to a burden to have to do this, but it, as much as I've heard other board members say, it provides them the flexibility to do what makes the most sense. And I agree with that. We also hear our stakeholders all the time tell us, just tell me how to do it. They don't like judgment. They don't like having to pick. They want you to tell them. And so last time when we talked about inputs, I was like, well, can we, for specific types of transactions, just tell them, just say, nope, for this, use inputs, for that, use outputs. And then we got to the time thing, and I was like, is that an input or is it an output? And I couldn't tell you. Sometimes, is it either, is it both? The paper talks about it this time. And I came down last time on, I don't want them to worry about, is it an input, is it an output, is it another? If this is the best way to do it, this is just the way I'm going to do it. And so that's where I kind of thought I was, and I'm going to rant all this stuff. But the way Jeff's just couching it is that, well, it's kind of like that, but we're trying to make them prove inputs or outputs first without going to other. And if that's kind of how it's going to be worded, then I get a little more worried. Now back to, is time an input, is time an output, is time an other? I wanted them to just pick the best one. That last bit gave me more pause when I thought I felt good about it.
But it's what I'm worried about, the way at least Jeff is thinking about it, is that a government would have to have the burden of articulate an alternative method without assessing inputs, outputs, and time elapsed. And so it's like the burden is on them to come up with an alternative method and then go, the alternative method didn't work, so I'm going to stick to inputs and outputs. I mean, if it's serving a platter to you to have an input and an output and a time elapse, and you look at them and you go, I found something that it works, my hope is that you stop right there. And if you say it's representational and you're good with it, but it's the ability to put it, so if there would be a desire to go further and say, for example, in this type of performance obligation, this is the measurement of progress, I think that is more application kind of guidance. And we could potentially run through either illustrations or we have not talked about implementation strategy at some point. I know we have to propose to the board those sorts of things. I'm going to imagine that the board is going to want a standalone implementation guide. Certainly a topic for consideration of how many things can we help illustrate in the reasoning to help people make those determinations. But I assume by the way we're written in the standard, which is the way it's written in 606, is they talk about the inputs method, they talk about the outputs method. Sure, that it's hard to deal with the time elapsed because it's in both. We would have a separate section, time elapsed. And then if the government doesn't find any of these methods to be appropriate, then they could determine an alternative method.
Chris?
Thanks, Shaq. Alan's always I feel like he's boxing me out half the time, like we're playing basketball. It's all good.
It's intentional.
It's intentional. I just wanted to say that I feel the same way as what Paulina articulated. I think it's way overcomplicating things to tier it, to make it a progressional, to match outputs for I think that's going way too far. And I think as a former recovering preparer, I think that you don't, like, 9 times out of 10 you're not thinking about that. It's the platter that she said that's in front of you, and you're automatic. It's like secondary, right? It's driving to the office every day. You just do it, right? And so just to know that you have these options, but to look at a transaction, to look at a binding arrangement and see, oh, well, I know that doesn't fit into this, that doesn't fit in. What am I going to do? Oh, well, I do have this out, and that I can pick another alternative method that could potentially work for me. I think it's as simple as that, and that we'd be kind of overcomplicating things if we think that there's you first have to look at outputs, and you then have to look at inputs, or you first have to look at outputs for expenses, and then input, whatever. Like, I don't think it's needed. So I agree with Paulina, and I'd just be curious to know if, like, other board members expected that it would be some sort of tiered, because I never looked at it that way. Or some sort of prescribed, you have to view these with these, or if it was just these are the methods, and you could choose whatever you want, depending on the facts and circumstances.
So, I don't know, Chris, I thought you and I are saying more the same thing, right? That you just pick, here's the platter and you pick the best one. And the way Paulina, and I'm now kind of thinking about it, I kind of can appreciate Jeff's point and Paulina's point a little bit, that we haven't gotten to question 4, but if question 4 says you pick the best one, then because other is an option, do I have to come up with others to then prove that inputs or outputs was the best one? Or can I just look at inputs, outputs first, kind of pick the best ones, and if those don't fit, then I go to other in a way, which is a little different than what I heard you say. Was more what I'm saying is like, just pick the best one. Here's all these options, pick the best one.
But I think inherent in that is that other is, I don't want to say infinite, but like it's this variable that it's not a 1, right? Other does not equal 1. So you go outputs, inputs, and other is all of these other things, right? And so what we're not telling them to do is to go through all of these other things. We're just telling them to pick the best one. But I guess just inherent in that, and maybe it's in explanation more, that you don't have to go through every potential option that might be in other, because you're right, that would be crazy. And at least that's not how I thought about it.
No, I kind of come around to that. I get that, Robert.
Yeah, the question I had for the staff on this one was, do you have an example of other? And the answer that Pam gave me was no. He couldn't come up with one. So I'm looking at this from the standpoint, and I like the word menu. I like menu versus platter, I guess, in this. I think practically most, when applying the ultimate guidance, they're going to look at inputs, outputs, then they'll say time if it's something that fits that particular. The other, they're not even going to get to unless it's really something that doesn't fit the other. And again, not being prescriptive and not saying thou shalt use inputs or outputs. I mean, as the paragraph from the basis of conclusions, basically said thou shalt use inputs or outputs, but you can do this other. I think having the menu there is fine, because I don't think that governments are going to come up with other. They're going to they're going to try and apply things based on what's listed, not necessarily that it's in priority order, but that's where they're going to go first. And if they can't get there, then having the flexibility to choose a method that can be defended using their judgment is fine. But I don't think, I don't want to sacrifice the flexibility, but I also don't want to say this, thou shalt use these methods.
Jackie.
So most of the people that are going to have to measure this probably didn't actually enter into the performance obligation. They're going to be stuck with it afterwards to figure out how to measure it. And my guess is they're going to go with what they know. First thing is, look for what can I measure here? And that's going to be an input and output, because that's how we're all trained as accountants, is to look for those kinds of things. We're not going to go looking for another. That's just way too much work. But if things get fuzzy in looking for the input or the output, I'm going to have to come up with something else, or I'm not going to be able to recognize anything until the whole contract or the performance obligation is completed. Now I need to put on my thinking cap and start looking at, can I come up with something else if what I traditionally go with isn't going to work? So I don't see this as necessarily a menu. They're just things that are out there that we all know about and we're going to naturally go to look for first. But we're giving them this third leg to stand on, basically saying, nothing there working for you? Can you come up with something else that'll allow you to recognize this before the end of the performance obligation? Go for it if it's going to be representational of the contract or the performance obligation. That's kind of how I saw it. So I guess I wasn't really looking at it as any kind of ranking or any kind of order or anything else. It was just, this is what I would naturally do, and you're giving me an out if I can't use one of what would naturally come to me.
Jeff.
So it seems to me like a lot of folks are sort of, what they're describing is sort of some sort of approach where you're going to go through the options. They don't want us to dictate that you go through the options, but they're saying, well, that's what people are going to do. So I think we should think about that, right? And I think when we get into the next question, we're asking them, I think what Joel said, what's the most representational? And I think I've probably been on this board long enough now, I'm starting to think like preparer, shudder the thought, but I'm thinking like a preparer. And now you're saying, okay, you're giving me these 4 options. I have to pick the most representational. Don't I have to evaluate each one so I can defend which one is the most representational? Therefore, I have to come up with another. And I think what everybody's saying is, nah, that's not really what's going to happen, right? Like it's going to be, for some vast percentage of the time, it's going to be one of the stated methods. So I think we can word it in a way that you're going to evaluate the stated methods. No, you don't have to do output first, input second, time third. You're going to evaluate the stated methods. If those stated methods don't work, are not representational of your pattern of transfer, you must come up with an alternate method, right? Like something like that, which in effect is what Paulina was saying before, right? You're going to do some sort of ordinal approach to this thing, because otherwise, if I make it a menu, then don't I, and I'll let the other preparers or auditors weigh in, don't I have to, how do I determine it's most representational if I don't even look at it? So that's
Diane.
And I agree with what I'm hearing. Well, maybe not what Jeff said, but but I like the way Jackie described it, because and I think Chris kind of said this too, like when you're driving the car, you just get in and drive, that a lot of this is just going to be intuitive when you look at it and you read the binding arrangement and you look at all of the performance obligation involved, and that you're going to look at it and go, yeah, there's no input, there's no output that I can rely on. Okay, what do I come up with? So I feel like it's a progression to a certain extent, but it's also kind of intuitive. So I think it's just an option. It's a menu, it's a platter, it's whatever, but it's an option.
I feel like we're all kind of sort of saying the same thing, and it's hard until you get the exact words on the page to figure out if we've hit the right thing. And it shows that, and this is the way our stakeholders are, that there are different people that think differently. There are Jackie and Diane who are going to be like, intuitively, this is what I'm going to do. And then there's Jeff who reads every word and says, most representational, here are options. I've got to prove that this one is better than that one. And if other is infinity, how do I do that? How do I come up with that? Right? Yeah. but we know that there are stakeholders that are going to read every word and are going to come at it a little bit like Jeff, right? And so we have to craft it in a way that best kind of fits all of them. But I don't know that any of us are saying anything totally different. It's just we approach things a little
I
different.
think you philosophically agree that those are the choices, and the government would have to select based on the number forward. To me, the question is, does it need to be said or not? And so when we start writing, we will nail down how to explain that.
And a little bit, we haven't got to question 4 yet, but a little bit is maybe the words of question 4. And is it most representational? Is it representational? Is it,
Is it most representation among the explicit methods? If not, then go develop an alternative method.
right,
I mean, that's
yes.
probably where the key is probably there.
Gotcha. Okay. Maybe we could go to question 4 now. I hit Kara right when she's coughing. Like, yeah, now you've talked for like 20 minutes and now you said it to me.
So the last topic of this paper is selecting a method to measure progress. Throughout the development of the proposals for input methods, output methods, time elapsed, and alternative methods, the project staff relied on a fundamental assumption, which was, could the methods analyzed be representative of the pattern of transfer of distinct goods or services? The project staff believes this assumption for selecting a method aligns with the board's tentative decision that the conceptual underpinning for the satisfaction of a performance obligation is when or as there is a transfer of control of distinct goods, distinct services, or a bundle of distinct goods and or services. With these tentative decisions by the board that certain methods could be relied upon to measure progress, it is up to the government to exercise professional judgment to determine which method most closely aligns with this conceptual underpinning. The project staff believes that generally, output methods will be the most representative of transfer of control because the output would be the actual goods and services delivered to the customer. However, as discussed previously, there are circumstances in which outputs are not representative, and in certain circumstances, the terms and conditions in the binding arrangement or the nature of the goods or services being transferred to the customer may indicate that an input method better represents the progress of performance. The project staff believes that the choice between which method to select would not be operable if provided in a prescriptive basis, meaning the project staff does not envision that an approach where specific transactions could be identified as suitable for input methods while others be identified as suitable for output methods, because the terms and conditions are unique to each binding arrangement. The project staff recommends that governments be provided with explicit guidance which articulates the objective for the selection of a method to measure progress, which we have in the paper as being the selection of a method that a government uses to measure progress be the method that is most representative of the pattern of transfer of control of distinct goods or services to the customer. We believe that this objective could be relied upon for governments when exercising their professional judgment and evaluating the characteristics of a binding arrangement. We believe this objective will allow them to select a method that provides the clearest evidence of the transfer of control of distinct goods or services. So question 4, does the board believe that an explicit objective be articulated that the selection of the method that a government uses to measure progress towards complete satisfaction of a performance obligation be the method that is most representative of the pattern of the transfer of control of distinct goods or service to the customer in a revenue transaction in the government and an expense transaction? And the project staff recommends including this objective.
Thanks, Kara. Kind of already talked about this a bit, but Jackie.
So I agree with the staff recommendation. I think we do need to put a guardrail in place. We do need to provide them with an idea of what they should be looking for when they're looking for a measurement method for their performance obligation. I don't have a problem with separating out and identifying that, you know, these are the standard methods, which of them is most representational. If none of these work, figure out an alternative if you can. And if you can't, you got to wait till the end of the contract agreement.
Thanks, Jackie. Chris.
Yeah, I agree with the staff recommendation and what Jackie said. And while ultimately, whether we, I know that the devil's in the details here, while it doesn't matter to me if we say input, output, other, choose, or like Jackie said, input, output, time, or if you don't get anything, choose. But, I think we just need it all there. I'm not personally getting caught up in that. I understand that might be an issue, but I just don't think in reality, in practice, that's really going to be the issue. If we say, if these don't work, go to here, or if we say, these are all of your available options. But that's just me.
Thanks, Chris. Robert.
I agree with the staff recommendation. I also think it is indicated doing this in a prescriptive manner would not work. But I like the guardrail. I could come up with another term. We were talking menu plat or whatever, but to basically provide some guidance to governments in selecting the methods, so they get a better idea of what we're asking them to do.
Thanks, Robert. Diane.
I agree with staff recommendation. I think that getting them to focus on an explicit objective could get them to at least, kind of look at the right things and then come up with what the correct method is, and without really getting into the weeds for being really prescriptive. So I think it's the right approach.
Thanks, Diane. Carolyn.
I agree with the staff recommendation. Having explicit objectives, really emphasizing that it needs to be representational. I also think that there are going to be times when there's going to need to be, where something other than, input, output, time elapse, where something else is just going to be the best method. So I think that that should be an option for exam providers, for preparers, for governments to use.
Thanks, Carolyn. Jeff.
Yeah, so I guess I agree with the notion, right, to not put out some sort of specific approach. And I think we talked about this in the context of, and I think I see staff shaking their heads as they sort of understand, which I think makes sense. When I thought about this objective, I, compared it to sort of FASB's objective, right? And FASB talks about it a little differently. And I think because they only have the revenue side of the equation, right? We have the revenue, and I was like, boy, that's easier, right? Because they talk about a depicted entity's performance in transferring control, because they only have to think about one side of the equation. Well, we don't. So that's where I was like, the way the objective is characterized here, I think is a fair representation of what the objective is here. I think this most representational, how it gets phrased so that we don't avoid this, if we go with a menu approach, how we deal with that to make sure that the preparers can understand what the approach is to how they're to think about this, I think will be important. But otherwise, I agreed with this approach.
Thanks, Jeff. I said my piece with the last question. I agree. This is really, since the last meeting, this has been the important part. I think it's important that it be a TBD, the board decision that we've got here. So I appreciate that we kind of came around and kind of wrapped it all up with this. But this has been important in my thinking since we started this part of the project. So I agree with the staff recommendation, encompassing that whole discussion we had on question 3 into it somehow.
And when I originally read this, I talked to Pam about this, I originally interpreted it as, are we saying that, which I don't think is the case, right? We're not going to do illustrations or examples of this choosing of the specificity we're not going to do, right? Is we're not going to tell them how to approach, the input or how to approach the output method, but we are planning, I think, sounds like that we're going to do some examples or illustrations or implementation guidance, right? Like how you think about a particular set of facts and circumstances as you approach the input method or the time elapsed method or the output method, right? Like that sort of specificity, I think, will be helpful to governments
And I think you guys
in using this principle that we're creating for them.
Right, but I think the board has also expressed a lot of really interesting examples. So you just mentioned, Diane, that the items that meet criteria and C over time most likely will function as an output. So the board has discussed as things the so-called stand-ready obligation, where we reframe it as obligations to provide services availability. That seems like a time elapsed. So there are some general examples that we have discussed and the board had felt comfortable that could be used as illustrating how, rather than a very explicit way of, okay, if you go through the inputs method and the outputs method and the time elapse, all these things, because it's not going to be applicable. So it's a little bit the way Jackie described. You're going to face certain circumstances and go, oh, this is this is that. And so the illustrations will provide an application avenue. We will have to see if there's subsequent more questions and issues that have to be addressed in implementation guidance. But the other thought that I was thinking based on y'all's conversation about whether and how to select them as representational method, I think probably based on your feedback needs to go into the basis of conclusions and clarifying that the determination that the most representational method doesn't involve assessing all potential and other methods to try to alleviate this concern. And so however we phrase the text of the standard, we can also alleviate through the basis of conclusions, assuring people that they don't need to go and invent alternative methods that says every alternative method they can come up with before they can arrive that inputs and outputs were sufficiently representational. So we can work through that sort of thinking based on the feedback you've provided.
Thank you. That sounds great. Any other comments on that? All right. Thank you for paper one.
Now we're going to move on to paper two, which examines some additional topics regarding measurement of progress. And the first two issues or questions in this paper are, should a government apply a single method of measuring progress for each performance obligation satisfied over time? And should that method be applied consistently to similar performance obligations? And at the end of each reporting period, should a government remeasure the seller's performance toward complete satisfaction of a performance obligation? The project staff believes that a government would apply a single method for measuring progress from year to year and would also apply that same method for similar performance obligations. And that is whether those performance obligations arise from the same transaction or from separate transactions. We believe that this approach would be supported by the qualitative characteristic of consistency, which is the qualitative characteristic of financial information as provided in concept statement 1. And to illustrate that point, we included an example in the paper. The project staff also believes that governments would remeasure progress at the end of each reporting period. And when we're talking about this step of the model, we are proposing that governments determine the proportion of a performance obligation that has been satisfied from inception to date. So to date meaning the end of that specific reporting period. This proposal is also supported by the qualitative characteristic of consistency because of a desire to consistently report revenues and expenses associated with performance obligation transactions that are representative of the transfer of control of distinct goods or services to a counterparty. If a government only measured the portion of progress completed in each reporting period, there could be a misalignment in cases when additional information is encountered that better informs the measurement of progress from inception to date. Measurement of progress is based on estimates and as such are subject to change based on changes in circumstances or when new information about progress becomes available. And so therefore, we also believe that remeasuring progress is supported by that qualitative characteristic of reliability as well. So I have two board discussion questions to pose. Question 1, does the board believe that governments should apply a single method to measure progress for each performance obligation satisfied over time and apply that method consistently to similar performance obligations in similar circumstances? And the project staff recommends that it should be. And for this paper, I'll turn it to Mary Beth for task force comments.
Thank you, Kara. Task force members who provided feedback generally agreed with the project staff recommendation.
Thanks. So just question 1, yes. Thank you. Board member responses. Chris?
I absolutely agree. I think that we want to drive consistency and for all the reasons that I'm sorry, which is that? Users, thank you. On fumes this morning. All the Jeffs out there expect it to be consistent. Yeah, I just think that this is, I don't see a reason why you wouldn't push for that conformity, that consistency, and the same method being utilized every time. So I agree with the recommendation.
Thanks, Chris. Robert?
I also agree with the staff recommendation and I won't repeat Chris's comments.
Thanks, Robert. Diane,
I agree with staff recommendation. I think this is consistent with concept statement 1, and we do want things to be consistent. So that I agree.
thanks, Diane. Jackie,
I also agreed with the staff recommendation. Consistency is important, so I think they should use the same method for that performance obligation and also other types of performance obligations that are a bit similar in type, simply because it could be too tempting to pick and choose if that was allowable. So for consistency and comparability, I think for both a single contract and similar types of contracts, they should use the same method.
thanks, Jackie. Carolyn,
And I also agree with the staff recommendation.
thanks, Carolyn. Jeff,
Yeah, I agreed. I saw no need to call out reliability specifically here. I think all the qualitative characteristics should be in play.
thanks, Jeff. I agree with this notion. I do have a question, I guess, more about wording than it is about the concept. So well, I'm going to bring up an example that I think I used last time, right? Where I have a city and maybe the city is split. Part of the city's in one county, part of the city's in another county, and they contract out for animal control to the two different counties. And they have separate binding arrangements with each county, but they.
Could you try again?
I'm trying. Separate binding arrangements, right? But for whatever reason, they structure them very differently. And so with one county, their contract is set up to just say, we want you to provide animal control in this area, and this is how we'll pay you. It's very kind of output based, whatever. It's animal control. The other one, though, they don't trust that county as much. They're like, no, you're going to have 8 FTEs that are going to work on animal control, 2 trucks, whatever. So it's a very almost input based, although those might be outputs too, but it's very structured. So some might look at that and say, there's a performance obligation to provide animal control. And when I look at the words, it says consistently for similar performance obligations and in similar circumstances. But in the example, in the paper, you talked about similar binding arrangements. And I guess my first question is, and I assume I know the answer, but it's those two situations I described, those aren't even similar performance obligations. In that case, one is a performance obligation to provide general animal control. The other is to provide people and trucks, even though those people and trucks are doing animal control, right? Yes. So that's yes. And so the terms and conditions, the binding arrangements, though, I guess what I'm probably getting at with that is, should I think of similar performance obligations and similar circumstances for similar binding arrangements is inherent in those two concepts? Or is it worth somehow weaving in, because binding arrangements are such an important part, weaving into the words similar binding arrangements? Or maybe I'm trying to make it too complicated.
No, I think it's an interesting clarification, because what we seem to be heading back in some of all the discussions is what's the unit of account, what's the recognition unit of account, what's the performance obligation. So in the first binding arrangement, the performance obligation is that the county's making the services available for animal control. And so most likely they're going to go through the time elapse method. So 3 months out of the year, that's your payable and expense, right? Revenue and receivable on the other side. But in County B, the performance obligation is not availability of service, but is having 3 FTEs and 5 buses and 3 dog trucks following around. So it's a different performance obligation. So what it may be important, and we have to figure out how to word throughout the entire, I think, narrative of this proposal, is going to be the ongoing tension that we have between the binding arrangement and the performance obligation. In the FASB, they obliviated that whole thing, because we have even 3 layers. We have binding arrangements, we have transactions, and then we have performance obligations. And there, because they substitute a transaction with contract, that's what they focus so much on performance obligations. So we have to be a lot more careful. How do we articulate our words to ensure that our stakeholders don't look at two contracts for animal control and go, oh, same thing. No, they're different performance. They're similar binding arrangements, different terms and conditions that produce different units of account. And so I think we have to clarify. It's just going to be an artful way of where and how.
Makes sense. Okay. I appreciate that. That's helpful, but I agree with this. We want this consistency, so I agree.
And then, excuse me, board discussion question 2, does the board believe that governments should remeasure progress toward complete satisfaction of a performance period at the end of a reporting period? And the project staff recommends that it should be. And Mary Beth for a task force meeting.
Thank you. Task force members who provided feedback generally agreed with the project staff recommendation. A task force member noted the cost and complexity of remeasurement for smaller governments could be significant.
Can I ask a question, I guess, first? Because I struggled a bit understanding what remeasurement was, because when I saw remeasurement, I intuitively kind of saw the word. I intuitively went to, we're not just measuring. It's beyond that. I'm measuring to, intuitively, I thought it was beyond measurement. Measurement was me specifying what happened during this period and allocating that part of what happened to the period. And I'm going to measure that. And remeasurement is something beyond that, which I think it is. I took it to mean, do I change methods? Do I change inputs to outputs? Do I change the different types of inputs, et cetera? And that is a form of remeasurement. But I think what I kind of came to, but I want to confirm my understanding, is that not only is it remeasurement by making sure you're using the right inputs or using the right method, but it's also this idea that you want to be sure from inception to date, you've measured the progress, not just focused only on what happened that period. And that at the end of every reporting period, you kind of have to think, not only am I using the right input methods, do I have all the right inputs, but have I, since inception, done it correctly? And have I accounted for everything that at this point in time, I'm looking at it as a whole, not just only what happened that year. So it's kind of like remeasurement is an in-between what I originally thought of as remeasurement and measurement. There's this notion of inception to date measurement that is being, I don't know, is part of remeasurement. Is it? I think it is, but I wanted to confirm.
Yes, we're talking about from the inception until the end of the reporting period. And including, assessing your methodology.
Okay.
Yeah, but what I hear you talking about, Joel, and I think this will bleed into the next question, right, is this notion of if a government's using the same exact method, right?
Correct.
But what they're doing is now every year they're remeasuring from inception to date,
Correct.
whether my estimates that I made, if you're making estimates along the way,
Correct.
whether those were accurate or needed to, oops, I thought I was 40% done, last year. I wasn't really actually 40% done. I was 35% done. And now I'm only 45% done this year. I have to go back and I have to do that exercise. If I don't change the next question, which we'll talk about, right, we'll get into, I'm changing the way
The method, input, and output. Yes, that's the second question, but let me correct one thing. So let's assume that's exactly what we intended. Let's assume that the government gets to year 3 and goes, oops, last year I assessed 30 and I was really at 35 or at 25, and then this year I'm at 50. You don't go back and oopsie daisy do anything. So the term remeasurement does not convey restatement. It just means that, oh, now what I'm 50, so I don't stack up the differential of only this year, but I make 50 minus what I did last year. So that's what it falls into this year, which is slightly off because of the slightly off last year. And so it just doesn't call to attention the estimation of last year of the progress, the proportion of progress may have been slightly off, but you have better information today. So inception today you're at 50. Because the problem is if you measure every year. So if you measure year 1, 30%, year 2, 10%, year 3, 50%, and you get to year 5, at the end of the term, you might end up with more than 100% or less than 100%. And that's not a good thing. Math ought to add up. And so by the remeasurement notion, what we're trying to convey is you're determining the proportion of progress from inception till the reporting period. And then you back off what you reported in last year, and that's it. That's the message that we were trying to communicate with this term remeasurement.
And it's, I think because it's an estimate, it's prospective, right? Let me just give you a.
No. Don't get into that conversation because that's a
No,
whole different problem. Let me clarify one thing. I'm sorry. The FASB calls this measurement of progress. And that word throws a huge wrench. The staff struggle. The FASB has written all of it. It's a number measurement estimate. And so it says measurement of progress, therefore recognize revenue. And it's like, stop. All you have done thus far is recognition. This is still a paper under the recognition protocol. So all you're doing is an estimate of the proportion of progress. And so maybe when we craft our own even TBDs, we may need to reframe it away from measurement of progress because it throws into the loop of, is this a number thing? Is this an amount thing? And all you're doing at this point is saying you had a single performance obligation. How much of that what proportion of that performance obligation you have satisfied or received from the vendor at this point in time?
Right. It's measurement of progress. It's not measurement of dollars, right? It's measurement of progress. And right, that's what this estimate is. It's a measurement of progress. So I see your point that it's not. But let me just ask one question just because, you try to poke holes. And so what if, and maybe you'll tell me this is another question or for a future day, but what if you made an estimate one year that you were 40% done, and then you're up the next year and you realize that estimate was not slightly off. It was a lot off. And this year, I'm only 35% done. So I've actually, I have a negative number, right? Like what you would have to deal with that, right?
Sarah?
Sorry, I just wanted to clarify also in our recommendation, we would include a clarification that this remeasurement does not entail restatement of beginning balance. I forgot to mention that.
Guess it depends on the words. I'll go ahead and say what I kind of came down on this one. I agree with this in concept. And maybe what Kara just added, maybe if the words are there, maybe that it's just there and it's fine. I am kind of interested in thinking about, is measure the right word here as opposed to determination or something like that. But it's almost the part of it that makes me inherently go to restatement. It's like I'm doing something that I've done before again, as opposed to what I'm really trying to do is measure or determine from inception to date. And whether I just wonder if there's maybe an option just to think about, take out and just say measure or determine from inception to date at the end of the reporting period. And that kind of more gets at what we're doing.
Historically, and I would like to check on the literature, but historically, I think we have used the term remeasurement every time. So I just would like to check.
Okay.
Restatement does not equal, remeasurement does not equal restatement, but in the circumstance in which Jeff provided, which I wouldn't mind clarifying, assume that you're in that circumstance and the number is material and it was due to misuse of facts and circumstances, there you're in error correction. You're in error correction line all day. But if you just had better information and inception today just got slightly off, you're just going to wind up with a negative number. And it wasn't misuse of information. It wasn't misuse of facts. So every fact and circumstance can land you slightly in a different slice of the word. But what we were just conveying is this inception to date, and we wouldn't mind rechecking to make sure that the terminology is consistent to the way we have used it. But in generally, that's what Kara clarified. We're not trying to convey restatement. That those two words do not equal.
And that's fair. I wouldn't necessarily want to be inconsistent with how we use the words, and maybe I mean I see that at the end of that, but I probably didn't focus on that part of the recommendation was that at the end it kind of just say that. So maybe that would be good enough, but that was my only concern with it conceptually was more the words. It wasn't the concept. So I agreed here. Other board members, Robert.
I'm not sure it's the right technical term, but the word that came in my mind is we're truing up. That's what we're doing. We're truing up. And my concern is, and Pauline got to it, was you get to the end and all of a sudden you've got 10 or 20% left. What do you do? You've already satisfied the performance obligation. What are you supposed to do with that number? So I would agree with the staff recommendation.
Thanks, Robert. Diane.
I agree with the staff recommendation. I had to reach out to staff for some clarification on this one, but and that helped a lot because my understanding is that we're going to remeasure from inception to date. What we're looking at is the new circumstances, new information that we may have, and is our methodology still correct? And do all of that evaluation and come to where we should be at the end of this period. So that's what I'm seeing, how I understand it, and I agree with that.
Thanks, Diane. Chris.
So I agree and echo Robert's comments. That's the first word I almost like in my head when I was reading, instead of remeasure, I just saw true up. And I'm like, that's what you do at the end of every year. You make sure that you true up your estimate so that it's, that makes complete sense. I guess we have to figure out the right technical term to put there, but as long as we're all on the same page as to what it means, I think that's a good start. So I'm happy with that.
Thanks, Chris. Jackie.
I also agreed with the staff recommendation on this. I had to think about it from a different perspective than everybody else because I was looking at it as, do I really want to change a delta for this, or do I want the remeasure from the beginning? And then I went and go, no, it needs to true up the contract. You need to remeasure it again because the time you measured it before could have changed from now, and you needed to look at it again from the beginning, from inception. So I agreed with the staff recommendation.
Thanks, Jackie. Carolyn.
I ended up agreeing with the staff recommendation. I did have some, I'm not going to say issues, but just some thoughts about how different entities have different reporting periods. But as we had the conversation, I came to the conclusion, like for an example, most are on a yearly basis, but there could be some, at least in the state of Ohio, that are less frequency depending on the size of the government. But having this conversation and thinking about it, that really doesn't, I didn't think that really would matter in the end. And then I was also willing to consider that maybe when we put this out for exposure, if that is a true concern, maybe some of those smaller governments might bring that up. But overall, I do agree with the staff recommendation and moving forward with this recommendation.
Can I ask you a question? What do you mean by longer reporting periods? So there's small governments who are reporting
every 2 years.
Just issue GAAP financials every 2?
I'm sorry.
So they would issue financial statements only every 2 years?
Mm-hmm.
Then at the end of the reporting period, their reporting period is 600 and something days, right?
And that's what, like I said, I came to that conclusion.
Okay.
That's just the fact, and it's not a
But do they issue annual financial statements every other 2 years, or they issue 2 years in a set of financials?
Ugh. I believe, ugh. I believe they have an audit every 2 years.
Sure.
So it could be, and I think it's going to be 2 years worth of information.
So 600 and something days.
I'm sorry.
600 and some days.
Yes. So that was
So the reporting period is 2 years, right?
correct. So that was my
Okay.
only thing that I was thinking of when I read this recommendation as far as, based on the reporting period.
Thanks, Carolyn. Jeff, you had a question earlier, but you
Yeah,
haven't given thoughts.
But yeah, I'm in agreement with what's proposed here, that this is a remeasurement of an estimate. Talk some more on the next question.
Thanks, Jeff.
Okay, so then the next topic for consideration is then what things if changed. So the question that Kara posed in question number 2 is essentially, as you noted, true ups. So inception to date, what do we got? Now we're in a circumstance in which the government has to look at what happens if in year 2, year 3, we were doing an inputs method and we determined that, hey, the input that we selected is not quite working, so we want to put more inputs. So we were using only labor hours and now we want to use labor and machine hours. So that's one version of the modification. Another sort of circumstance is that government was using an outputs method and goes to year 3 and goes, oh, this is really not working. So we need to change to inputs method. So change of complete methodology. And so the proposals in here is essentially the project staff is recommending that those changes, in our opinion, fall within the provisions of Statement 100 and should be allowed for a government to make those assessments. We didn't tee off in here, but there could be circumstances in which, similar to what Jeff had expressed, a government gets to year 3, instead of having been 40% of last year, I'm actually 35% this year. It could be circumstances in which everything around it, the government had the proper facts and circumstances, is just a change and the inception to date. But there can also be circumstances in which a government used an inputs method or an outputs method and misinterpret or misuse some amount of information or ignore some piece of information or might selected the wrong method. So the way the project staff looked at this changes in methodology of measurement is that in certain circumstances, we believe it meets the definition of a change in an estimate as defined in paragraphs either 7 or 8 of Statement 100. There are other circumstances in which the project staff believes could meet the definition of change in accounting principle. It is feasible to identify circumstances in which these changes can also yield an error correction. And so the way that Statement 100 works is essentially it's a default mechanism. The board created the sorts of rules and principles in Statement 100 that a government would have to deploy every time it faces certain facts and circumstances, including transition provisions and a new standard. However, the provisions in Statement 100 also specified that if the board does not find desirable the conclusions that would be provided or yield by Statement 100, the board then would need to specify a different conclusion in a specific standard OP. The manner in which this guidance has operated, it only already predates 100. 100 just made it a little bit more explicit, and 62, we didn't have that written down. But if you remember, changes in accounting estimates and changing in accounting principles predate actually the FASB and the GASB. It was issued originally in APB Opinion 20, and it was issued in 1971. And in there in paragraph 4, the guidance is very explicit. This is not retroactive, nor supersede any other guidance. And so it provides this default mechanism. Let me give you an example of this. When the board was developing Statement 33 back in the day, remember they were relaying an OPB opinion at that point. And so when the board was building Statement 33, the board looked at a very specific facts and circumstances in the grants transaction. In the grants transaction, the provisions in paragraph 26 of Statement 33 says what to do when there's a contravention of eligibility requirements. The words are not ideal, but the way it technically works is after you have issued financial statements, and if you discover that you have contravening eligible expenses, so you report them last year as allowable cost, you should recognize a payable and an expense only if the granting agent is probable that the granting agency will recover those expenses. Is that an application of Statement 100? Nope. That's an override of Statement 100 for a reason. Reporting non-allowable expenses as revenue and receivable is an error correction. That was an error. And therefore, in a subsequent reporting period, should be reported as a restatement of beginning balance. But the board determined that that was not an ideal outcome for multiple reasons. Among the information issues that is not ideal, the other issue that the board looked and considered in that circumstance is that I think we all have suffered the circumstance and see what the federal agency goes, okay, I don't want the money back, but I'm going to reduce next year's allowance. So I'm going to cut down next year's grant and then just don't send me the money back. And so the board viewed that the grantor often finds ways around to work this. Another typical is let's swap. Okay, so you report those as allowable costs. They really are not allowable costs, but you have a ginormous pool of other costs that are allowable. So let's just swap them out and get there. And so the granting agency often finds methodologies in which the reported and allowable costs and ineligible costs get swapped, adjusted, or modified in any way that does not result in returning the resources. So the board looked at that circumstance and said, you know what? Having an error correction and restatement of beginning balance did not seem representational, is not a prevalent circumstance. So let's create an override to Statement 33. It's statement at the time, APB Opinion 20. And let's provide an avenue. I tend to tell my inquirers a mulligan out of error correction. And so the board did that. So that's the operability of statement, the PV opinion and error corrections dating back 50 years. That principle was maintained when the board codified a PV opinion into Statement 62. However, we didn't carry the words into the standard. It was just something that we knew sort of by tribal knowledge. When Statement 100 came about and the board re-examined that guidance, the board made it more explicit. And in Statement 100, the board provided that provision. And the way it's worded is that in the circumstances in which the board does not, the board needs to provide explicit guidance, then you would do so in specific pronouncements. The reason for calling this issue out is because the way in which the project staff recommended the approach for question 3 is essentially to allow governments to follow the guidance of Statement 100 and arrive to their conclusions depending on the specific facts and circumstances. So we are recommending to the board to take door number 1, which is the default approach. If the board does not determine or conclude that that is an operable approach or is not a circumstance in which you believe is going to provide representational results, the board then can take option number 2 and go, we're going to override this conclusion and we're going to provide you an explicit piece of guidance on how to arrive or how to manage any of these changes of methods of measurement of progress that we have just discussed. And the conclusion would be X. Because we didn't recommend an override, we didn't provide a recommendation what that override might look like. However, an important piece of consideration, and I think, Jeff, you mentioned a little bit of this with your implementation guide question, is what materials fall on level A guidance and what materials fall on level B guidance. If the board would have locked down to inputs, outputs, and time, we cannot go back to level B guidance and invent another method. The board has to leave the door open in level A guidance for us to then, the staff, propose a clarification or expansion of the guidance. And so to provide a clarification of how the provisions of Statement 100 may work in the facts and circumstances of these proposals, it's not recommended by the project staff because that's not the interaction of level A and level B guidance. If the board would like to have clarifications on how to account for changes in estimate, changes in accounting principle, error corrections, we would be glad to add it to our ever-growing list of potential topics for implementation guidance. As I noted, I assume you're going to want a standalone one. We have a running list, and we'll be happy to add the topic to a potential consideration. But those are essentially the three types of approaches that exist when Statement 100 overplays with other guidance. Is if the board believes that the effects and outcome of Statement 100 works, you let Statement 100 be the thing. If the board wants to provide an override and an exception to Statement 100, then you have to be explicit in an OP. And if the board wants application guidance, then we need to put it in level B guidance. So with that explanation, I am going to pose board discussion question number 3. Does the board believe that the guidance should be provided in this project to address changes to the methods used to measure progress towards a complete satisfaction of a performance obligation? And as the project staff noted, we recommended to remain silent so that the provisions of Statement 100 would be applicable. If the board alternatively does not believe that the guidance should be silent, then it would be appreciative of the board providing us direction to what the override would look like if we need to provide clarification in the standard. Task force comments?
Thank you, Paulina. Task force members who provided feedback generally agreed with the project staff recommendation.
Thanks, Paulina. I will say I don't want to say I struggled, but I thought a lot about this one, and I really had to work to apply it. And I'm going to somewhat take some of what I just heard you say and maybe reframe it a little bit with some of my thinking included to get other board members' reactions. So I tried to think about how 100 applies here. It gets back to the last question a little bit of what is it we're really doing here? And we use the word measure progress toward complete satisfaction of a performance obligation. And as we just talked about, maybe measure isn't the right word here. Maybe it's determine progress toward complete satisfaction of performance obligation, because you have to separate. Really, what we're doing is determining when to recognize something, which is we've determined how much of the performance obligation we've satisfied. And then of that amount we've determined we should recognize, how do we measure it? What's the dollar amount for it? And when you take that stance and you separate these things and you read the words in 100 that changes in estimates talk about measurement uncertainty when something's recognized, it's not about recognition, it's about measurement. And most of what we're talking about here, these changes in progress, are about the recognition part, which makes me think most, if not all, of these changes are really changes in GAAP. It's a change in accounting principle where you've picked some way to recognize something and then you determined you'd want it a different way. And then if I followed that logic through, if I think most or if not all of these are changes in accounting principle, that would require restatement anytime a government does this. That sounds overly punitive to me, similar to the contravention accounting. And I might say, maybe we should override it and say all these are prospective. They're changes in estimates, even though they might technically be changes in accounting principle. If, though, the board looked at and wanted to say, I want to override it because I think the determination between accounting principle and accounting estimate is hard, that's not an appropriate way to override. That's implementation guidance. Let's fix that through implementation guidance. Don't override because of that. Stay with your recommendation and override that. And so I kind of lean to, I think they're mostly changes in accounting principle. I think it's punitive to restate all those. I think we just override it and call it accounting estimates for that reason, but I'm interested in other board members' thoughts. Diane.
So I don't think it's very clear the difference between change in accounting principle or change in accounting estimate. I think you could have two governments, exactly the same circumstance, and one could call it accounting principle change and one could call it an estimate change. I think that going back to Statement 100 and reading the basis, we reference Statement 62, and 62 has said that if a change in accounting estimate is affected by a change in accounting principle, you treat it as an accounting estimate change. Now, I know that 100 overrode 62, but I'm using that as an example because it was confusing. You can have something that appears as both. I also think, and the point that you're making, I think is one that I really agree with, is I think that it should be perspective. I really feel like if governments are doing the best they can to estimate this, I don't want them to go back and restate anything. I want them to do it year by year, even if there's some adjustments. However, I think that talking about the error correction should be restated. But I think that if it falls into a government deciding it's a change in accounting principle, if another government says the same thing, it's a change in accounting estimate, I want them both treated the same. I want consistency. I want it to be applied the same. And so I believe that it should be overridden and should be treated as an accounting estimate, whichever bucket it may be in, as far as what the government determines, with the exception of a change due to an error correction.
Because you feel like the appropriate accounting, I'm going to set the error correction apart for a minute. The appropriate accounting is prospective, not restatement. So you
Absolutely.
more or less agree with overriding because that's the better accounting treatment.
I do, yes.
This idea of an error correction, if you override it, can there still be error corrections or not?
You have to write it in such fashion. Any changes within changes in measurement methods and measurement of progress result in a change in accounting estimate unless they result from an error correction. They result from an error, from a misapplication of statements or something like that. And so therefore, if you change from an inputs to an outputs to inputs, alternative, linear, whatever, I don't think we're disputing changes of one input to another input. I think this is just a discussion of inputs to outputs to input and alternative methods. And so you would have to clarify, or you have to write it in that way, unless this is an error correction. But if you believe that that's a straight application of Statement 100, then we go back to, are we elaborating level B guidance in NOP?
But Pauline has a question. What you just said, I think what you just said was kind of important to me, the way I try to understand this. Part of this is if you read this about, and I'm gonna use the words, if you read it as measurement of progress towards, and you hang on the word measure, right? You can get to accounting estimate, you want to go to accounting estimate. But what I heard Pauline say, and I've heard you say is, this is really about, I don't want to use the recognition word, it's about determination of progress towards satisfaction. That's about recognition. Change in accounting estimate is about measurement. So theoretically, you should never get to the other one. You should be in the accounting principle bucket because you shouldn't be getting to change the accounting estimate because you're not about an estimate at that point, you're about recognition. And so part of it's about making sure folks understand that when we're talking about measuring progress, it's about progress towards recognition. It's not about progress towards the dollar amount. You said a minute ago, I just want to make sure because you agree with that, right? That's what he said was important.
Right. So the measurement word would be ideally removed from the narrative of the section. So we would have to write something along the lines of determining the proportion of progress or satisfaction of a performance obligation. So it would be a little wordy, but I think it would be highly advisable to remove the word measurement because it causes issues as we crafted the paper. You can see the issues in the guidance in 606. And if the two of us had issues, that stakeholders are going to have issues. So we need to make sure that it's clearly part of the recognition process. And the word measurement perhaps needs to be removed just to ease the conversation.
Because to follow up on Joel's point, if you get there, it's about recognition, not measurement, then you get to accounting principle. And if you get to accounting principle and you get retroactive, well, we don't want retroactive. And now I have to say, now it's overrule 100, say, yep, if you fall 100, you should end up in the accounting principle bucket, but that would cause retroactive accounting treatment, which we don't want. So now we have to overrule it. But it's all about starting from the standpoint of this isn't about measurement, it's about recognition.
But if you follow the logic that that's the right accounting, and especially that's a good example to talk about contravention, there's no error corrections in there either. They just get out of everything. And so like Diane kind of still wants the error correction scoped out, but if you argue this is just the best accounting, I don't even care if it's error. You could not even care if it's an error correction.
Correct. I mean, in the contravention circumstance, if the resource provider never asks you for the resources back or is not probable, then it doesn't show up anywhere. Disclosures, nothing. And you only have a payable and an expense in the circumstance in which becomes probable. And that is factually an error correction. And so in that circumstance, what the board did is said, we don't believe it's appropriate to report an error correction. We believe that the best accounting is a simple perspective of payables and receivables if it's probable that the money would be returned.
Well, the other thing is that with the error correction, it has to be something that would have been known at the time too. So just going back and remeasuring or looking at all of this and then saying, oh yeah, we should have adjusted it lower, but you didn't know that a year before, then it's not an error correction. It all falls into this prospective bucket.
Correct. And that's why when Jeff's example, I didn't respond right away. I wanted to make sure. If everything you did is the best information you have, and then next year turns out that whoopsie daisy things didn't work out, if you have the best information, you can't. But if you misuse information or should have known something, which is a really high bar, should have known something, then lands you in an error. But if the board determines that even in those circumstances you want to treat it prospectively, it's the board's prerogative to do that.
And that's why I think that treating it all prospectively is important, because then the government is using the best judgment that they have at the time for the end of that reporting period. And if they did not know that it was something different, it wasn't an error correction. If it adjusts it downward in the next reporting period, then I think it should be reflected that way. And so that's why I think the error correction should be an exception, because I don't think it's going to come up that often because of that clause of they had to know that information.
Diane. Jackie.
So this one, I went all over on this. I actually went to 100, read the basis for conclusion, because I'm kind of going on, even in 100, we use the term measurement. And sometimes it's really not clear exactly if it's tied measurement to the principle or measurement to measure. And I ended up going back to 62 because only in 62 in the basis of conclusion could I actually see what everybody was talking about when they were talking about estimates and principles. I thought, if I'm having this much trouble, people are going to be all over the place on how they interpret this. Is this going to actually be a change in estimate, or is it going to be a change in principle? I know what I ended up on, but that doesn't mean everybody else would have ended up there. And so my concern was, one, we have a standard 100 that we put in place. And if every time we write another standard, we're going to override 100, why did we put 100 in place? So that was one of my concerns right there, was that we were doing that. On the other hand, I kind of agreed with Diane when I was going through. To me, it seems like stating all this retroactively when all I'm doing is looking at my contract and saying, or my performance obligation, and going, I really didn't get this measurement thing down right to start with. Let me do some tweaking on here so that my numbers come up better. It may be a change in principle, but they're doing it because their estimates really stink. So now I'm going, why are they changing that retrospectively when all they're trying to do is make a good thing happen prospectively? So I was really caught in a catch-22 on that. So I'm almost to the point where I want door number 3. Keep 100, but let's tell them how to apply these situations and see if we can clean up how it should work. I think there's going to be too much
if you were to land in door number 3, which is keep 100, no override, just tell them how to apply, then that goes to implementation guidance.
Yeah, it does. And
Okay.
there are going to be some situations there where it actually may end up being a change in principle, because I can actually see where most of the time it's going to be, let me clean up my estimate. But some of the times I think it could be earnings management in some ways. Not that that ever happens in government. And that should be a change in principle now, because they're not trying to clean up an estimate. They're trying to change the way things look. They're changing their principle. So I don't know that it's always just a change in estimate, so that's kind of where I'm at.
Thanks, Jackie. Robert?
When I first looked at this, I was probably looking at too straightforward and going, I just like the consistency with 100. Some of the comments that others have made me question that a little bit, but I think I'm probably closer. I'm not sure there's a door number 3, but I think from a practical perspective, most are going to get to the point, except in circumstances, if you want to call it earnings management, looking, window dressing, whatever, they're going to get to the point where they're going to conclude it's a change in estimate, unless it's the change in the methodology is so significant that they're going to say it's a change in accounting principle. I'm not interested in having a lot of restatements. I mean, because someone changed from input to output method. But at the same time, I guess I trust them that they're going to utilize the provisions of Statement 100 to go through that roadmap and make an appropriate decision about how to apply it. And in most circumstances, it's going to be, they're going to come down on the side of it's a change in accounting estimate. And they're going to try and figure out a way to do that because they don't want to restate. I think that's part of it. And so I'm comfortable with the staff recommendation.
Robert, can I ask a question
Yeah.
now? If we get on this door 3 box, and I'm very careful, I'm gonna try to be very, very careful how to ask this question. But if you went down that path, you said, let's have a NIG that clarifies 100. And we're thinking that this measurement of progress is really about, I don't know what word you want me to use, Paulina, but identification of progress towards satisfaction, whatever it might be, whatever word we might replace measurement with. I don't know how the IG gets you to an estimate. The IG is going to get you an accounting principle. So the IG is then going to say restate, which you don't want. And an IG won't be able to fix the fact that once you're a principal, you have to restate.
Well, this is the reason why we generally don't promise questions to the board, because sometimes we sit here and we think this is the answer, and then we start writing it up, talking to other people and go, oh. So if the guidance is silence, if your proposals are silence, we would put it in the list of topics to consider whether or not guidance could be developed. And so it's a dangerous path, but that's the consequence of the staff's recommendation. As the guidance remains silent in the OP, with the topic of can we consider implementation guide, clarification issues that we can think about with respect to changes of measurement methods of assessing progress.
And when I read 100, accounting estimates are amounts subject to measurement uncertainty that are recognized or disclosed in the basic financial statements. And all this stuff is about recognition. So an accounting estimate is measurement uncertainty when something already is recognized. So most of these things we're talking about when it's changing what's recognized, to me, are changes in accounting principle. Like, we're not going to Alan's point, we're not going to be able to IG out of that. I think they're going to be changes in accounting principle, which means restatements. Based on the words in 100.
Back to what you said, just say it's a change in accounting principle. We don't want you to restate. That might have been exactly what you said, but the point was you don't want them to have to go on the path of having to restate and just say that.
Correct. So I guess I'm advising board members to heed Paulina's caution that the IG may not be able to help the way you want it to help here. You raised your hands. It said Chris, then Carolyn.
I was probably where Robert was when I first read through it. I didn't spot all of the hangups that some others mentioned. I guess I'm still kind of on the fence about it. If we think about our different methods that we identified and how we could go forward, I'm trying to think through the likelihood that you picked out outputs in year 1 and 2 and you realized in year 3 it should have been inputs. What I'm trying to figure out what are we really solving for here? What's the risk? I mean, I understand the risk, but like how big is that risk? And I don't know how big it is. We talk about then the significance of that risk too, right? And a contract that's so big, or contracts that are so big that in all of these we decided to do it this way over that way, and in every single one of them we said, or in this one that's massive, we said for whatever reasons we can no longer rely on this output, even though we understand the consequences of changing and that it means the big R word that we don't like to say. We're still going to do it anyway. And so that's like, as a preparer, I'm trying to get to the point where I see all of that in front of me and I say, yeah, I still want to go there. And I don't know who goes there. Maybe, again, outliers often and few and far between, but to me, I don't see that as a big enough overall issue for us to about face or do anything inconsistent with what the staff is recommending. So I guess I get it, but until and unless I see, okay, this is what's before a lot of people and these are the circumstances where they might go about that change, again, knowing that that big R is in front of them, and meeting all the fact patterns of these performance obligations, these binding arrangements, either individually or when we group them all together, they're that important, they're that significant that they're going to result in that. I just don't know how that comes about. Not to say that it never does, but just to say that I don't think that we should be working with that specific goal in mind as we go through this question. So I agree with the staff recommendations and wouldn't propose any changes. And if there's no IG questions that follow, I'd be able to sleep at night.
So Chris, if I heard you correctly, and it's an interesting way to think about it, because at one point I've kind of got myself worked up into the theory more than the practical. And at one point when I was thinking about the practical, it was like, how many times does this happen? Like are we, if we think 80% of the transactions are going to use the abridged method or what, whatever it is, it's probably not a routine occurrence, even though we're talking about, well, when it happens, what do we want to happen? And it's probably not, as you described it, when it probably happens is when I have this big, unique kind of contract that the bridge method didn't work. I had to go to the complex accounting and I kind of not used to doing it. So I didn't know what I was doing. And so I messed it up, right? And so then for those, I don't want to say one-offs, but those unique, but they're probably going to be significant transactions, am I okay with them having to restate in that case? Then maybe that's fair, So I might have gotten caught up in theory over the practical implications, but
and Joel, like, what does messed it up mean, right? In practice, right? Does it mean that, oh man, and looking at this in hindsight, there was a better way for me to do that?
Right.
That could be the case. But
Right.
you know what?
Yeah,
I'm riding with this method because
I've never done
did.
this before.
Right.
This is a big contract. I picked inputs. It seemed the best, but I'm not used to doing that because I don't usually have to do that because I always use the abridged method. I'm 2 years in and I go, this didn't work, right? So okay. I mean that I think that's a fair point. Carolyn.
And I, and probably where Robert was when I read it, I say, I agree with the staff recommendation as far as statement 100 provides the proper guidance. But I also did leave it out that if there's any confusion, which it sounds like it very well could be, then maybe, and let me just kind of back up. I also don't like making exceptions all the time, but I would rather go ahead and make the exception to not have different governments treating very similar situations differently. One treating it as a change in estimate, another one treating it as a change in principle. So if that's the scenario that we are looking at, I am comfortable with us just stating that, this is how you treat this subject. So that's where I landed at. And I don't think I don't think the staff recommendation will get us there as consistently as just going ahead and stating that this is how you treat this will get us there. So with that said, I agree with being more direct in how these transactions should be treated.
And Carolyn, you think how these should be treated is a change in estimate? Robert?
So I just have a question. So this is way getting cart before the horse, but would it be something where the language would be, I'm just making this up, but consistent with the provisions of Statement 100, we would actually state something in the statement? Or how?
That's what the staff is recommending against,
Right.
is to write consistent to the provisions of Statement 100. This is a change in estimate,
Right.
because that's writing level B guidance and NOP.
That's what I'm trying to understand, trying to convey that these changes in recognition would be considered changes in accounting estimates in all circumstances.
Then that simply says that. Any changes between methods of estimation,
and-
progress of completion shall be treated as accounting estimates.
And accounted for perspective.
And therefore, prospectively, the basis of conclusions would say something along the lines that the board believed that it was too punitive to restate, that it not being frequent. I mean, a lot of the issues that you have elaborated. But it would not say it's consistent to Statement 100.
In my mind, Robert, what you're overriding is, if you look at the idea, what Joel was talking about, is that this isn't measurement of progress, it's recognition of progress. You want to override because you don't want them to go to principal and have to restate. You're overriding by saying it's not a principal, it's an estimate. Now, theoretically, if you read 100 the way it's written, you wouldn't get that. You couldn't get there. You're telling them to get there anyways.
And if we wanted to drive consistency, then the implementation guide could be developed and drive consistency, but it's going to drive them to changes in principle, in my view, and restatements in those cases. But to Chris's point, maybe there aren't that many of these, and that's the best thing. But it's not going to drive them to call them changes in estimates. I wouldn't think. I don't think we're going to come up with a circumstance where that's the case enough in an IG. Personally, maybe it exists and I'm not thinking about it. And that's okay, right? Like if you're comfortable with these being changes in estimates, or not, I'm sorry, changes in accounting principle, and you're comfortable with them restating it, you just want consistency. You just want, it might be confusing and not everybody's getting to that conclusion. We can deal with that in an IG. You just have to be comfortable. That's probably the answer you're going to get. Versus the option I proposed was, let's override it because I don't like that accounting. Of course, Jackie.
I think that there probably is even going to be inconsistency within the same principle. For example, if they decide that the input they were using isn't the best input, they should have used a different input, or they should have added input onto the input that they were using to refine their estimate. I think there's still going to be confusion there on, okay, is this just a change in estimate, or is this a change in principle because I changed the item I was using in that principle, kind of a thing. So I kind of agree with Chris that if you're going to a whole different output versus input method and you're 2 years into it and couldn't figure out that you weren't measuring it correctly until then, that's probably a much bigger issue or a problem than if they start looking at, okay, I need I need to refine my inputs that I'm using, the right method, but I need to refine those inputs.
But I think that changing from one input to a different input or adding inputs, I think it's a little clearer in the guidance in paragraph 7, where it talks about changing account estimates occur when changes in inputs. So I think that's a straightforward conclusion. What is harder to assess is when you change from one method to a different method. And I think it's particularly ambiguous when you're doing the passage of time, because as we have discussed, the board is tentatively comfortable identifying that is even a third alternative when in FASB land is part of both the inputs and the outputs. So if you're doing time elapsed, are you an inputs or an outputs? And is that change, if you change from that input method to another input method, what does that mean? And so that's sort of there. I believe that there's a degree of facts and circumstances that are going to be very difficult and challenging. I think you're going to encounter, particularly as Jeff was asking about the alternative methods, if a government is in an alternative method or changes to an alternative method, how close is that going to be to an input and output? And is that going to be something that I can articulate as a change in estimate or not? And so there are circumstances that I think are going to be a little more challenging, not just a straightforward input to output, output to input, but there are a lot of other circumstances that can be fairly challenging. And so that's what you're weighing.
I guess I struggle with some of what you just said as I read 100. Like, isn't all of that, even if I change from one type of input to a different type of input, it's still all about determining what I should recognize. It's not about measurement uncertainty. I would argue that's not even a change in estimate. That's a change in accounting principle.
To me, that's a change in your input in the estimation.
Yeah, but
To me, that's a change in the input in your estimation method. It's not a change in principle. And I think it goes back to, okay, how clearly do you have to define principle in order for everybody to be on the same page? Which I couldn't find a good definition for that.
And that would not be in the scope of this project.
Well, I think if we're having this discussion about is it an input or is it a change in estimate or a change in accounting principle, the average preparer out there in governments is not going to be going, well, let me see, this is recognition and not measurement, and therefore, I mean, they're going to be flip a coin. It could be one of either one. And I really think it comes back to Joel's point about, are they going to make the change prospectively or restate? And I really feel like if they're doing the best they can to come up with those estimates every year, why are we asking them to restate? It's just give them the benefit of that doubt, and unless it's an error, and then everything is prospective and any of these changes that happen.
the thing about it though is like, it comes back to what Joel's saying though, is this is about recognition. Then none of it's about an estimate. It's about recognition. So I don't know how you get to changes in accounting estimate. I don't know how you get there. If it's about recognition, it can't be about changing accounting estimate. It's got to be about changing in principle. So to me, it's a lot about this measurement of progress towards the satisfaction is what is that about? If the focus of that is recognition, which I think it is, if it has recognition, then you're never going to get to saving accounting estimates in 100. You're just going to get, the only place you can get to is principle.
But isn't it an input that ultimately informs the estimate? That, because I could get there. You may not be able to, and I may not be able to be in the weeds with you, but I can get there as an estimate.
Depends how you interpret that first sentence of paragraph 7, right? Like, if it's about measurement uncertainty, we said flat out, that's what estimates are about, measurement uncertainty. And I think we're in a world of, we're saying it's recognition here, which I think is what Joel and Alan are sort of saying. So I think, and believe me, when I read this, right, so I've been sort of strangely silent, right? Because when I read this, I was so much in the mindset, right? And I went back, FASB talks about it in this cryptic term, if there's changes to update the measure of progress. And I'm like, this measure of progress include all the scenarios we're talking about here, like input to output, change in input, change in the way you measure your particular input. Is all of that buried in measure of progress? Because they all say that's perspective, all of those things. And so they get to the outcome that we're all thinking we want by effectively calling it an estimate. And then because we would use measure, right? I'm looking at, and now I realize, in my view now, I think the interpretation that it is, in fact, a principle is correct. And I think the cleanest way to go from my perspective is to say, if we think that we don't want retroactive, we want perspective, really for cost benefit reasons, right? Might we want to be nice and other things, but it's really, it's couched in cost benefit reasons, right? That we say, this is a change in accounting principle. Any changes here are changes in accounting principles, and those changes in accounting principles should be done prospectively. And this way we don't run the risk of having to put a square peg in a round hole in terms of how we interpret what we really meant in.
I'm sorry, I think you said changes in accounting principle prospectively. So you will be treating this change in estimate prospectively.
I think
With the exception is what we're talking about, right?
I think what he's saying is these changes will be applied prospectively. Don't even call it one or the other.
Right.
Just say these changes are prospective. I don't
I
want to put
could
words
go-
in your mouth,
Well,
but
I
I think
could
that's
go
what
there to
you were
call it
trying
a
to say.
principle, and effectively what you're talking about is like an exception or an override, which is going on here. That's what we're doing.
I would just avoid the confusion of people wanting to then bifurcate. Well, they only talked about the changes in principle. I think this is a change in us. I don't know. I just would, let's just, if we're going to override it, just override it. Period. Like all of it. Well, correction of an error, I could.
Yeah, I mean, correction,
debate,
that's why,
but-
because correction of an error, I don't think we need to override. I
But if
wouldn't
we
wanna-
but to Pauline's point, if we override, we have to state what the override is. And the
Right.
override is
That's why it's,
everything except error corrections is whatever, or find some words, but.
right, everything but error corrections.
Right.
Right.
So that's where you are. You're at kind of where Diane is. So if I stay where I am and I could be okay with exception with error corrections, then I think it's Carolyn, Jeff, Diane, and I
Correct.
are
So
override
we call it an estimate except for error corrections.
prospective accounting, except for error
Prospective accounting.
corrections as an override of 100. And the others, Robert, Chris, and Jackie are the three that were essentially agreeing with your recommendation.
Okay.
Everybody good where they've landed in that? Well, I mean, maybe not good, but Robert,
Well, I'm still there. I'm hanging on. I don't know, maybe I have more faith in governments being able to apply the standards we propose, and they could make determinations about what's a change in estimate versus a change in principle. And just apply statement 100 in these circumstances when they arise, which I think is going to be very infrequent. That being said, I think they'll love to take the easy way out, and if the decision is to override, most preparers will be happy with that, and they don't have to deal with the restatement.
thanks, Robert. Chris,
I don't know. I think when you select a method, that's important and that means something, and understanding that there's weight to it matters. And while I do understand that we want to stay away from ours, I also understand that we want to give the right accountability to that preparer or that individual that has to go about that selection process and picking it. And you know, I know we made our decision 4-3, but I just don't think, one, I don't think it will amount to much daily, but then two, in the cases where there is the one-off that is that significant, I mean, I don't know what it is, but maybe in those cases a R is necessary because we're talking about something that's so massive and so important to the government, and you really flubbed it up, and you should have known this on the start. I don't know what those circumstances are, but I know just given the past from the beginning without seeing anything, to me just doesn't feel right.
But I guess that's part of the error corrections remaining in. If you really flubbed it up and you should have known better, then you're probably falling in an error correction and you would still restate it.
But I thought we just said that if you picked the wrong method and you're moving to another method, that you can adjust towards the future instead of going back retroactively.
Unless I mean, you're going to have to make your determination of, is it an error correction? In other words, the standard says pick the best method to measure, to determine progress towards satisfaction. And if at the 2 years into it, you're like, man, I should have known. Like if 2 years into it, you're like, I didn't know any better, and now I'm making a change, then yeah, it's all perspective. But if it's like, you should have known.
All right. So what we're talking about
then that's the error
here is you give me the responsibility of picking whether I get my hand slapped or I get, oh, whatever. Like, when does anybody ever pick the more severe option, right? If you give it to them to select, was this I messed up, or was it just, hey, things happen? How many times have we dealt with people in our workspaces and on our private lives where they never want to take the accountability for the I messed up, for this was the actual error? So I just think that it's just like, practically what we do is lead people down a path where you get a mulligan. And somebody used that word earlier, but I think it was Paulina. But you just give them a mulligan, you can correct it going forward. And in practice, there won't be an error because you can always justify, well, it kind of wasn't my fault. It really was the facts and circumstances that existed. So I feel like in doing this, we are just automatically allowing people to go forward. There really is no error. You could always justify away or write something to say why it wasn't my fault and it was the fault of some other party that won't lead me down the line of error. So that's just my feel.
I would maybe go as extreme as you said, but there's probably some truth in, if it's close, you're gonna probably not get the error correction. But we deal with this now with estimates, right? That sometimes you got to make this hard determination as a preparer or probably as an auditor of, no, there's judgment involved in what you should have known. And so I think, I won't say we're used to it, but we do this sometimes. So there will be circumstances where some auditor is going to go, no, like that's not right. So I don't think it will always effectuate the way you describe it, but I do think it probably leans that way. So I mean, I hear you, but that doesn't bother me, I guess, as much as the alternative. Anybody else? All right, I think it's time. I know we've got the next questions aren't necessarily unrelated, but we probably need a break. So let's please try to be back at 11:30. And we'll keep going. All right, welcome back. We're continuing on with paper 2 and revenue and expense recognition. Kara, turn it back to you.
Thank you, Joel. The next topic in this paper relates to how governments would address measuring progress in circumstances in which it lacks information needed to select a suitable method for measuring progress. Topic 606 provides that an entity would not be able to measure progress if it lacks reliable information to apply an appropriate method of measuring progress. The project staff believes that the tentative decisions made by the board at its March 2025 meeting are relevant. At that meeting, the board tentatively decided that proposals in this project should include a requirement that the development of measurement estimates be reflective of the 6 qualitative characteristics of financial information identified in concept statement 1, rather than solely focusing on reliability. Both the measurement of progress and measurement estimates involve estimation. though they pertain to different components of the revenue and expense model, where measurement of progress is part of the recognition component of the model and measurement estimates the measurement component. The objective of estimation of measurement of progress is to determine how far along a seller is in the satisfaction of a performance obligation over time, from the inception of the binding arrangement to the date at the end of a specific reporting period. And the project staff believes that this is an estimate, but because it's an estimate of the proportion of the performance obligation that has been satisfied, it is pertinent to recognition. When moving into the measurement component of the model, the proportion of the performance obligation that has been satisfied from inception to date will be associated with the allocated binding arrangement amount to establish a monetary amount to associate with the elements of the financial statements that are required to be reported. And this monetary amount reported would be the incremental portion that has been satisfied in that reporting period. For this reason, the project staff recommends extending the board's tentative decision that measurement estimates in this project be developed consistent with the 6 qualitative characteristics of financial information as provided in Concept Statement 1, and not solely based on reliability, to be applicable to the measurement of progress towards satisfaction of a performance obligation. So board discussion question 4, although it says 5 in the paper, is, does the board believe that the tentative decision below should be extended to encompass the development of a methodology for the measurement of progress? And that tentative decision is when measurement uncertainty is present, a government should, to the extent practicable, develop estimates that are reflective of the 6 qualitative characteristics of financial information as identified in Concept Statement Number 1, Objectives of Financial Reporting. And the project staff recommends that this tentative decision be extended to encompass measurement of progress. And Mary Beth for task force feedback.
Thank you, Kara. Task force members who provided feedback generally agreed with project staff recommendation.
Thank you. So for sake of the discussion, we'll call it question 5, and question 4 was skipped, but sure. Question 5, board member thoughts? I don't mind going first here. To me, this really gets back to our last discussion in a way, if I'm thinking about this correctly, in that the TBD we have currently talks about measurement uncertainty. And if you take that to only be about the estimates, not necessarily about the recognition, or it's not clear if it's about the recognition, and now we're really talking about measuring progress, or maybe better, determining progress towards satisfaction of a performance obligation. In making that determination, you should use these 6 qualitative characteristics. That's the expansion of the TBD you're talking about. Just to be clear that measurement's one thing, recognition is kind of sort of something different, but we still think all that stuff should apply in making this determination. That understanding, I agree that this is important for us to do, and we should expand the TBD for this determination of progress as well. Jeff?
I think I agree exactly with that sentiment, Joel. I think you're saying, let's in effect, as we rework this recommendation for a year, we take out the notion of measurement uncertainty, and we sort of say a government should, to the extent practical, determine progress reflective of the 6. Because it's not, I'm trying to be consistent here. I said I don't think it's an estimate. So I can't say, well, we use this language of estimates into this thing. So I just say whatever terms we come up with, determination, determine progress, reflective of the 6 qualitative characteristics.
I mean, this doesn't necessarily have to replace the kind of more general principle that if there's measurement uncertainty in any aspect of the project, we think the same.
Yeah, but
it's like it still applies.
Right.
But,
this is coming from somewhere. The somewhere from where it's coming doesn't change.
right.
For
Okay.
purposes of this measurement
Gotcha.
of progress, right?
Okay.
We have to rework it because we've said it's not an estimate.
And adding to it or whatever.
Right. Changing the words to get it away from estimate words.
But not doing away with the old words, just this is the new words.
Right.
Gotcha. Jackie?
Yes, I agree with the staff recommendation that we should follow the 6 concepts to the extent practicable when looking at uncertainty.
Thanks, Jackie. Chris?
Yeah, I agree as well. And it's highlighted, as you said, Joel, in the conversation that we had earlier, and kind of differentiating the different paths, but that you could apply this same framework to your estimate in these methods.
Thanks, Chris. Robert?
I agree with the staff recommendation.
Thanks, Robert. Diane?
I agree, and I think it always helps to remind preparers, auditors, users about the 6 qualitative characteristics.
Thanks, Diane. Carolyn?
I also agree with the staff recommendation.
Thanks, Carolyn. Should be all of us.
In addition, the guidance in FASB Topic 606 provides that in cases in which an entity is unable to measure progress because it lacks reliable information, but expects to recover costs incurred, then an entity can recognize revenue to the extent of costs incurred. In their basis for conclusion, it explains that this approach is consistent with prior guidance, that pertains to the application of a cost recovery method. In the development of the preliminary views, the board rejected the reliance of cost recovery method and the installment method because those methods were associated with uncertainty in collectability, which this is an issue that has not been redeliberated yet. And while the project staff's recommendations about collectability will be incorporated into a future meeting, we considered whether cost recovery methods should be retained as an alternative for circumstances in which a government is unable to develop a reasonable estimate to measure progress. The project staff notes that this issue is not about how to select a method, but rather an issue in which a government may be in a position of having entered into a new transaction, and their lack of experience with the transaction has created a circumstance in which they do not have sufficient information to assess any method to measure progress. If the government believes that the transaction meets the overtime criteria but lacks information to develop a method to estimate progress, the project staff believes that a cost recovery approach could be a proxy until such time in which the government has access to better information. Once better information is obtained, the government would discontinue that approach and apply that suitable method for estimating progress. If the proposals in this project do not include an alternative for this circumstance, the project staff believes that the outcome would be that a government would have to delay recognition until either that information becomes available or until the performance obligation is completely satisfied, which then turns the transfer of control into a point in time, which then in effect negates the need to assess overtime criteria. So therefore, the project staff recommends providing an avenue for governments to recognize costs recoverable in a revenue transaction for circumstances in which an estimate of progress cannot be developed that is representative of the 6 qualitative characteristics of financial information. We recommend that this proposal be clarified so that it should be discontinued as soon as better information is available so that the government can rely on an adequate measurement of progress. And then that brings me to board discussion question 6. Does the board believe that in circumstances in which a government lacks the information needed to select a suitable method to measure progress that is representative of the pattern of the transfer of control of distinct goods or services to the customer, a cost recovery approach could be used as a proxy until such time in which a government has access to better information to select a suitable method? And the project believes that it should be. And then at such time, the government would discontinue that cost recovery approach and apply a suitable method to measure progress. And Mary Beth for task force feedback.
Task force members who provided feedback generally agreed with the project staff recommendation. A task force member noted that allowing cost recovery as a proxy could lead to inconsistency in practice, if not limited to rare circumstances.
Thanks, Kara. So I struggled with this one a while, and talk to the team about it. And I think I've come around to understanding, but I want to confirm it. And in a way, it kind of builds on the task force members' feedback. This really ties to question 5, and we now have a TBD that is something like when you're determining the measurement or when you're determining the progress you've made towards satisfaction of a performance obligation, the government should, to the extent practicable, develop amounts that are reflective of the 6 qualitative characteristics. So that phrase, to the extent practicable, to me is maybe key, in that what we're really trying to do is there might be circumstances, and we've said practicable is a pretty high bar. We've used it in past guidance, et cetera. It should be relatively rare, maybe to the task force members' comments, that we end up in this situation, as opposed to when I first started looking at this, I was looking at, well, the government's just going to be able to stay in this forever. And, is it, how does this kind of all work? And what are we really allowing here? But if you focus back on, if I'm thinking about it correct, what we're really trying to do is from inception, we want you to record something, but if it's not yet practicable for you to know enough to make that determine your method, then that's when you could use this cost recovery method. Is that accurate reflection of what this is trying to do?
Yes.
Okay, thanks. In that case, I agree with the staff recommendation. I think we don't want them to not record anything from inception. We've kind of done that throughout this project. But we also want them, when they can, to make their determination. They can't just delay determination, but because we have that practicable bar, we've used that in our standards for a long time. People should know what that is. I think this would be relatively rare, so I think this makes sense to do. Other board members' thoughts on question 6? Jackie.
So I'm supportive of the the staff's recommendation for a temporary situation. The one problem I had, being conservative in my accounting, is that there were circumstances that were mentioned where they may actually enter into an agreement where they know their costs are going to be greater than revenue. And if they can record all their costs as a proxy, at some point in time, they're going to be inflating their revenue because they're recording their costs, even though they know they're not going to get revenue that'll override that. I would have a problem with that. To me, it seems like they shouldn't be able to record any more costs until the point, after the point of the revenue that they're going to get, and to be conservative. After that, they either need to negotiate the contract so they can get more revenue to cover their costs, or they're going to have to come up with something, but they shouldn't be able to continue to record revenue when they know they're not going to be able to receive it, even though they are incurring costs. So yes, I'm supportive up to a point.
Jackie, would the recovery part of cost recovery not limit you to only the cost that you could recover?
I would assume, but I don't know, because it was mentioned even in the example that there were situations where they might incur costs that exceeded their revenues. So I just so that they're sure that that is limited.
Well, the intent of that is because in the private sector, the way this is described in 606, and it used to work in the old guidance, is you use cost recovery, so the amount of cost incurred until you figure out, and then you recognize the profit. In our case, you may never recognize the profit because there isn't one. But the issue, so that was the purpose for highlighting that circumstance. The issue with the cost recovery method is that you're really walking into a circumstance in which you don't know the total cost that you're going to incur. Therefore, you cannot use the proportion, because the proportion helps you never to exceed the revenue to what you agreed to. And so that's sort of the problem. But as it was described and Joel mentioned, is limited to until you have better information in which you need to swap to one of the applicable methods. So hopefully and theoretically, a government should not stay in a cost recovery method for the entire shebang of the contract, and therefore run into the situation where it's recognizing more revenue than the terms of the binding arrangement. That would be pretty bad.
Fine with everything except the word hopefully.
I can't fix what people do out there.
Exactly.
Thanks, Jackie. Robert?
I agree with the staff recommendation. I think the biggest issue for me is that if this is an arrangement where it should be recognized over time, and this is used as an excuse not to delay till a point in time. I think giving an option in this regard will appropriately allow the government to appropriately recognize at least an estimate of the revenue that should be recognized.
Thanks, Robert. Diane?
I agree with staff recommendation. I think this is good to provide some sort of temporary way to measure progress, and hopefully it would be temporary.
Thanks, Diane. Carolyn?
I agree with the staff recommendation. These circumstances should be few and far between, and it's not a permanent state. It is a high bar. So as soon as the governments get to the point where they can come up with a better representation, they should definitely switch to that point. So I agree with the staff recommendation.
Thanks, Carolyn. Chris?
I also agree with the recommendation.
Thanks, Chris. Jeff?
Yeah, I picked up on the same thing that Jackie picked up on, and I sort of thought about it and said, and asked staff, in a world of trade-offs, right? I got to take the trade-off, right? That the revenue might be a little bit higher because the government's costs are higher than what it's going to recover in revenue. And but I think the way you explained it, Paulina, right, gives me comfort, maybe rightly, maybe wrongly, that if you approach it as a proportion thing and you use the proportion of the costs, total costs, what costs you've expended, take that proportion, apply that proportion to the revenues you expect, then you won't have this overstatement, right? So that to me makes total sense. Now, will all governments do it that way?
No.
I don't know, but
the advantage of that, the proportion method would be that's an inputs method. This is a circumstance in which you do not know the total cost. And so you're dollar per dollar recognizing how much cost you're incurring, you're turning that number into revenue until a point in time in which you have better information, and then you should be swapping methods, which the board determined as an estimate. And so therefore, when you swap methods, then it's just prospectively a new methodology that you have measure and move on.
so I still am in a world, right, where this thing could exist, right? That the costs are just the government isn't going to recover its costs under its contract. And so weigh that against too late recovery or waiting too long to recover, to reflect any revenue. I'll still agree with the recommendation and take that trade-off.
Thanks, Jeff.
So throughout the board's deliberations on Category A recognition, the board has made tentative decisions regarding the timing of certain assessments, including the identification of distinct goods and services, should be made in the context of the transaction at the inception of the binding arrangement, and the assessment of the mode of transfer of control of goods or services, point in time or overtime, should be made at the inception of the binding arrangement. These tentative decisions were made because the board believed that generally the identification of a performance obligation should be made before government recognizes elements of the financial statements, since the basis for recognition is the satisfaction of that performance obligation. The project staff believes that the method used to measure progress also informs the basis for when a receivable arises in a revenue transaction and when a payable arises in an expense transaction. And we recommend that the selection of the method used to measure progress toward complete satisfaction of a performance obligation occurs at the inception of the binding arrangement. Board discussion question 7. Does the board believe that the method to measure progress toward complete satisfaction of a performance obligation should be selected at the inception of the binding arrangement? And the project staff recommends that it should be. Here, Beth.
Task force members who provided feedback generally agreed with the project staff recommendation.
Thanks, Kara. Maybe I didn't eat my Wheaties when I read this. Like I had a lot of problems here, but you guys have helped me work through them. how this correlates to question 6. Taken literally, you almost say that how can we have both an allowance to not pick it until practicable, but you have to do it at the beginning. The idea here is that you don't really have to do it until it's practicable for you to make the determination. But once you make that determination, you in essence make sure you account for it as if it had been determined as of the inception of the binding arrangement. That's really kind of what this is saying. Yes. Yes. I agree with the staff recommendation. It makes sense. Like our other decisions, and when you're measuring things and determining things, you should do it from inception. Chris.
I also agreed with the recommendation and think this is pretty straightforward.
Thanks, Chris. Robert.
I agree with the staff recommendation.
Robert. Diane.
I agree with staff recommendation.
Thanks, Diane. Jackie.
I also agreed with the staff recommendation. It's consistent with what we've done in the past.
Thanks, Jackie. Carolyn.
I agree with staff recommendation also.
Thanks, Carolyn. Jeff.
I agree, just recognizing what you did, Joel, that there's a notion of if practicable here. Like if you can't do it, you can't do it at inception, right? And also recognizing that, as we talked about in the prior questions, that method could change. So if you can do it, you'll do it at inception. You're not locked in for the life. If there's a reason why it needs to change, you'll change it, right? So recognizing those two aspects of it, I agree.
Thanks, Jeff. I know we're nearing lunchtime, but I would rather keep going if we're okay. We had a break relatively recently, and if we have to shortcut lunch a little bit so that we get through the last paper today, that's, I think, our preference. So if that's okay, we'll keep going with this paper and see how far we get. We do have a hard stop for lunch at 1 o'clock to start the public forum. So if this goes too long, we do need some time for lunch. We might cut it off and figure out where we are, but let's see how far we go.
Okay, so thank you much. We are now moving into paper 3 on the real measurement thing. So this topic for measurement is going to be about variable consideration, specifically the right of refund and rebates. And so the first topic that we address for the board's consideration is regarding refunds. And I think as we were putting together this paper was one of those moments where we have been talking about refundability since the invitation to comment. So really an awful lot of memory lane. And so we put for the board's consideration a recap of the process and the progress that we have gone through refundability, particularly for 2 reasons. Existing guidance creates essentially an asymmetrical conclusion for circumstances in which you have an exchange revenue with refundability and an exchange revenue without refundability. So if an exchange transaction includes refunds, at right of refund, you can't recognize revenue until it's no longer refundable. But if it's a non-refundable advance, therefore people conflate this issue and arrive to the conclusion of a non-refundable advance is revenue on day one. Well, that's a bit problematic in the context of this project. And so from that perspective, we had begun those conversations back in the invitation to comment, and the board had already made tentative decisions in the process of 3 redeliberations where the right of refund does not have any effect and impact on recognition. So whether an advance is refundable or not does not affect the timing of when an item of information meets the definition of an element of financial statements. And so this idea that providing an advance that is not refundable as revenue on day one is not consistent to the framework that the board has developed in here, particularly in the context of the anchored element hierarchy. And so that was the very first piece of the discussion. In addition, the board also had expanded back in the ITC the idea of refundability to services. In Statement 62, the refundability issues limited to goods. And so we're going to expand to a performance obligations, which is made out of goods and services. Then there was already a consideration to look at as a right of refund, not a right of return. and consider goods and services. For the purposes of the preliminary review document, which is when the board first developed the anchored element hierarchy, is where we had to address two very important recognition aspects. As I mentioned, is refundability is not a recognition point. And the way we had demonstrated and helped the board reach tentative decisions was through the provision of court cases. We have encountered several circumstances in our review where a vendor had received a non-refundable advance and had failed to perform. And so again, the conclusion, historical, traditional, is if it's a non-refundable advance, it's revenue. No, it's not revenue. Refundability does not excuse performance. What we have seen in the court of laws is that the court of law would hold the vendor accountable, and they would either have to provide alternative performance, find a solution to the customer, or in fact, return the money. I think we can all talk about and remember COVID days when students got sent home and they had to refund non-refundable payments for housing. And so this notion of refundability is really more a protection for the vendor. It's a protection for the vendor when they have very large fixed costs and is preventing the customer from walking away midstream of the performance and going, I didn't get on my performance, I want my money back. That's what it's creating, a protection. But it does not establish any basis or any principles for the satisfaction of a performance obligation. Even if you have non-refundable advances, whether you're seller or the buyer, there is a need for performance to be able to work through this. And that was the fundamental principle in which the board established its anchor element hierarchy and removed refundability from recognition, which is a big departure from existing guidance in Statement 62. In addition, the board considered whether refundability had a basis for establishing defer inflows or defer outflows of resources. During the development in Statement 65, refunds were assets as prepaids or liabilities if you had received them. And in the development of Statement 65, the board went through those items and considered whether refundability also could establish defer inflow and defer outflow resources as opposed to assets and liabilities. And the board rejected that approach because the argument in favor was, well, if you have a non-refundable advance, you're just waiting for time to get through for you to be your money. No, you're not waiting for time. You're having to perform. You're having to deliver a good. You have to deliver a service. Or if you have prepaid, you're expected to receive an expense. And so also the board rejected in the provision of Statement 65 the idea that refundability could establish defer inflows or defer outflows. The board therefore carried that very same exact thinking into the development of this paper and the development of this project. And so therefore is how we have always referred to as refundability as an issue of measurement as opposed to an issue of recognition. The existence of refundability in a revenue and expense transaction does not determine whether you have a receivable accompanied with a liability, an asset with a liability, a deferral, or revenue. It has no determination in that. But if you have a revenue transaction in which there is a refund, the board has tentatively agreed in the proposals of the PV to treat it as a measurement issue, which is a refund liability that thereby reduces the amount of revenue recognized. And because it reduces the amount of revenue recognized is how we have referred to it as a measurement issue. We have also discussed with the board the idea of, again, applicable to Category A and Category B transactions and existing guidance. As I mentioned, Statement 33 discusses the issue of recognize. All the provisions referred to as recognize revenue net of refunds and collectibility. And so it just says net off, but it doesn't tell you how to treat it. And so we have also some circumstances, as we discussed the last time, where refundability may not always be accounted with a refund liability. And for circumstances in which it's material, then we have run into troubles with our stakeholders for these issues. And so for the purposes of this phase of the project, we have reviewed both the work that the board has done through the development of all the ATC, the PV, and this phase of the project. And we have not uncovered either in our work or stakeholder feedback any issues that render us to have to sit in front of you and go, okay, we need to think about refundability in the context of recognition. So we just wanted to make sure you knew that we had done the review, but if you find anything that you would like to revisit, happy to open any topic. And so from that perspective, we started the discussion of refundability from a perspective that is a measurement issue. So it's going to create a refund liability to reduce the revenue. And so for the purposes of this phase of the project, we wanted to discuss a couple of very specific issues. The first one is, again, we recommend that the board continue to expand refundability or the right of refund to be applicable to goods and services. As noted, is an existing guidance. It applies only to goods, therefore it create problems to the scope of this project that covers goods and services. And it also, we wanted to make sure that as consistent with the tentative decisions that the board made in the last meeting, to be applicable to Category A and Category B transactions because it's consistent in both sides. We identified a couple of examples of refundability. We have discussed in the August 21st, we discussed several examples of property taxes, sales tax, income tax. We did not find prevalent examples for donations and grants, but with the assistance of a colleague, we were able to identify a theoretical refundability circumstance for donations. So it might be pertinent if this were to eventuate. And the biggest caveat in our consideration is that the proposals that we're putting forward in here are consistent to Statement 33. So there is, in our opinion, no new proposal. So we're recommending essentially with regard to refundability for Category B to be consistent to 33. But with regards to Category A, we're recommending to expand it to be applicable to goods and services. The part that we run into a little bit of a challenge has to do with refundability on the expense side. So refundability from the revenue side, as I noted, would be based on a probability threshold. On the PV, the board went probable, but we would like to talk to you about the probability thresholds consistently for any circumstance in which the board wants to talk about probability thresholds in this project. And the PV, you guys proposed probable, that there's going to be a refund. And so a government would have to make a refund liability for an amount that estimates that is probable. But what happens when the government has an expense transaction and it's probable that the government may want to return their goods or request a refund for their services? Should the government recognize symmetrically a receivable for circumstances in which it's probable to return goods or request a refund of services? And so, as is noted in the paper, the project staff did not address this circumstance and would like to bring proposals for you to consider this when you consider contingent consideration. In FASB Topic 606, they did create a receivable for contingent consideration that is probable to be recognized. That may create a conflict and a challenge with regards to contingency literature that is codified in Statement 62. In Statement 62, the board's guidance is a liability that is probable to occur should be recognized as a liability, but a contingent asset, no go. And so we run into the situation in the refund liability, we're going to run into a much larger context when the board looks at contingent consideration. So for those reasons, we have not included any recommendations with regard to refundability and expenses. We limited recommendations in this paper to refundability in the context of revenue transactions. So applicable to Category A, Category B, to expand refundability to goods and services, and to be mindful that it's essentially over a different approach for exchange transactions as it has been in the past, but we believe is a consistent approach with regards to Category B transactions and refundability. And so with that, I'm going to pose board discussion question number 1. Does the board believe that the accounting treatment for the right of refund should be applicable to Category B, Category A and Category B revenue transactions? And we acknowledge that this recommendation is consistent to the TBD already in August 21st, but we still wanted to ask the question just in case the board had any specific thoughts on this issue. I forgot to mention, task force feedback was in agreement for all the questions in this paper. So with that.
Thanks, Paulina. Revenue transactions. I look forward to the expense discussion. I don't know. That one sounds hairy. No gain contingencies. Statement 62. Anyway, Board member thoughts here. Question one. Jackie.
I agree with the staff recommendation. As you pointed out, it's already consistent with what we've been doing up to this point. So I don't believe that we should do anything different. So I agree with the staff recommendation.
Thanks, Jackie. Diane.
I agree with staff recommendation. I think with category B transactions, it'll be consistent with statement 33, but I don't see it happening very often with category B transactions, but I think we need it to apply to both.
Thanks, Diane. Robert.
I agree with the staff recommendation.
Thanks, Robert. Carolyn.
Based on the work analysis, it appears to be a fact in both A and B. So I agree with the staff recommendation.
Thanks, Carolyn. Chris.
I also agree with the recommendation.
Thanks, Chris. Jeff.
Yeah, I see no reason to change course. I agree.
Yeah, I kind of got into this at the August meeting for all the reasons I've kind of talked about then, conceptual framework, et cetera. I agree here. No reason for this to be different.
Thank you. Board discussion question number 2 talks about the scope and applicability of right of refund. As I noted, in existing guidance is only applicable to goods, but if we're going to be applied to the performance obligation approach, we recommend that the board consider applicable to goods and services. So board discussion question number 2 is that the board believe that the accounting treatment for right of refund should be applicable to revenue transactions that include the provision of goods and services.
Question 2, board member responses. Robert.
I agree with the staff recommendation. I don't see why there should be a distinction between goods and services.
Thanks, Robert. Chris.
Yeah, and based on the nature of governments, as explained in the paper, I think we should include goods and services.
Thanks, Chris. Jackie.
I also agreed with the staff recommendation that we should expand the scope to include services as well as goods, since they're so frequent in government and applicable in some cases, not a lot, but in some.
Thanks, Jackie. Diane.
I agree with staff recommendation, and this is consistent with what was presented in the preliminary views, and I agree with that.
Thanks, Diane. Jeff.
Yeah, I don't see a justification to exclude services, so I think they should be included.
Thanks, Jeff. Carolyn.
I agree with the staff recommendation.
Thanks, Carolyn. I agree with the staff recommendation as well. Comes along with what we've considered in other parts of the project, and no reason services should be any different.
So for the purposes of the third question, the issue here is really the accounting treatment for refundability. So the nugget is the government would have to create an estimate for what it is a threshold. I'm using probable only because of the PV, but that is probable that it would return, and therefore it would have to create a refund liability. That's the piece of the guidance that does not exist today. And I think it often is convoluted and confusing. And so sometimes we have observed some stakeholders say that, for example, property tax refunds, they come out of the revenue, the period in which you refund them. Well, sometimes those things relate to 5 years ago or 3 years ago. And so by creating an estimation of allowance of refundability, then it will reduce the revenue of the period which the refund liability arises at. And so it creates a need for estimation and reduces revenue in this manner. With regards to category B transactions, based on the tentative decision to expand it to goods and services, I think the services component is going to be similar, straightforward. The government has to make an estimation of the amount that is probable that it may have to refund and then has a refund liability. However, there is a small tweak when it comes to goods, which is why the guidance has always highlighted goods slightly differently. What do I do with cost of goods sold, and what do I do with inventory that comes back? As you noted in the project staff analysis, there's a lot of discussion about how the FASB looked at it, and in some circumstances, it assumed at some point that it could be a stand-ready obligation, and so it created a lot of complexity on the accounting for the goods to be returned. The project staff acknowledges that governments in general are not in the business of making widgets and rarely of selling widgets. They do, but they don't frequently do it. And so a recommendation for that was to remain silent and allows government to manage the return of inventory in a manner that they deem appropriate. And so the only proposal in here is to be very clear in acknowledging the need to recognize a refund liability in the period in which the transaction that gives rise to the liability is arising. And that's the recommendation proposed. So board discussion question number 3, does the board believe that a right of refund in a revenue transaction should be recognized as a refund liability that reduces the amount of the revenue reported? The project staff recommends this proposal consistent with the preliminary reviews and to recognize as a liability, and as I noted, the threshold for it, because there would be a threshold associated with it, would be addressed also along with contingent consideration.
Thanks, Paulina. Diane?
I agree with staff recommendation, and I think it's important to go ahead and carry this forward from the preliminary views. This also provides clarity to the provisions that already exist in Statement 33. So I think that's a real plus for the users or for the preparers and auditors as they try and use this, and that they will understand it better on how it's to be handled.
Thanks, Diane. Jackie?
I also agreed with the staff recommendation. I agree that it's a liability. Performance isn't affected. They still have to perform. So this is a measurement issue, not a performance issue. So I agree with the staff recommendation.
Thanks, Jackie. Chris?
I also agree with the staff recommendation. I think this this will be an easy pill to swallow because of the comfort associated with preparers already dealing with these types of setting up reserves or liabilities accounts to deal with their, that revenue coming in.
Thanks, Chris. Carolyn?
I agree with the staff recommendation. I just like that it seems that we'll be providing a little bit more transparency. So I agree with the staff recommendation.
Thanks, Carolyn. Robert?
I agree with staff recommendation. I think preparers, well, all stakeholders should understand this. I mean, it should, in my mind, it's fairly straightforward, depending on, the circumstances of the transaction.
Thanks, Robert. Jeff?
I think I heard you say this, Paulina, right? So you say the recommendation says reduces the amount of revenue reported, right? In the period that the revenue is collected, right? And I think that's
in the period in which the transaction occurs. So we need to.
So in this whole category B world, that is a pretty big shift. You're gonna now have to estimate your property taxes that are gonna be refunded, right? In a way you can't just pass the buck, or if there's property tax disputes and all this stuff, you're gonna now have to estimate that in the period of transaction
of the protest,
as opposed to just letting it net out or wash out when the actual decision is reached or whatever, right? So that to me seems like a pretty big deal.
Well, it's a change in practice because the problem is the guidance is simply not clear. It says report revenue net off, but it doesn't tell you net of when the refundability would have occurred. So people might interpret. We discussed this in the August 21st meeting. Some people allude that all the overpayments and the refunds are the same, so we net them all out and just rock and roll with it. And so we have seen that in sales tax, and we have seen in the property tax, we see this frequently. And so when people refund the property tax, which are experienced, the normal period between the challenging the protest and the resolve of the protest is about 5 years. That's what we know on average. Well, you shouldn't be reporting the refund on year 5. You should have an allowance for refunds on year 1 when somebody filed a protest. Sure, it's an estimate, and the number could be wrong, and we already have a whole discussion of change in estimate that just in year 5 is change in estimate. It doesn't matter whether it's up or low. but you have an estimate from day one that reduced the revenue of the period in which a property tax protest occur. So it can be a change in practice, but I think it's not a change in gap. Is maybe the way people have interpreted, we would have to clarify that it reduces the revenue in the period in which the revenue occurred.
And we were not super clear in the PV about that point, right? So I think what might be good for the decision here to be reflected that it is in the period. That's the decision we're making here, right? Which is important clarification.
Thanks, Jeff. I agree with the staff recommendation. To me, I kind of back in August agreed to this in principle, and this is just a specific application of it in this circumstance. And it's almost about the journal entries in a way. And I agree that this is kind of common sense journal entries to reflect the principle I'd agreed to back in August, but I agree with this.
Okay. Moving into the second topic discussed in the paper, another type of variable consideration is rebates, which can encompass a variety of transactions. In order to determine the approach to account for rebates, the project staff reviewed guidance in the GASB Implementation Guide 2015-1, which equates certain rebates, such as property tax rebates, with a refund, and therefore provides that they be reported as reductions of tax revenues. Also, FASB guidance treats certain volume-based rebates as a form of variable consideration, reducing the transaction price and resulting in recognition of a refund liability. As observed in practice and described in the examples provided in the paper, the project staff believes the label rebate can function differently depending on the facts and circumstances of each transaction. Some operate as a refund of revenue, as shown in the GASB Implementation Guide question and answer and the FASB 606 illustration, some as incentives, and others as standalone Category B expense transactions. Because of this diversity, the staff believes that the accounting treatment should not be determined by the label rebate itself, but instead government should assess transactions that include a rebate on a case-by-case basis to determine the appropriate accounting treatment. The project staff believes that once a rebate is assessed, the accounting treatment should follow accordingly. If the rebate functions as a refund within a revenue transaction, it would be addressed under the refund proposals previously discussed. If the rebate operates as an incentive in a revenue transaction, it should be treated in line with the future proposals on incentives and consideration provided to the customer. And if the rebate represents a Category B expense transaction, we believe its treatment should be considered in connection with future proposals on Category B outflows and sales taxes collected by governments. With that, I will pose board discussion question number 4. Does the board believe that rebates should be individually assessed to determine whether they are part of a revenue transaction or whether they are a standalone Category B expense transaction, and the project staff recommends requiring this assessment?
Thanks, Brett. I kind of took this to mean substance over form, right? That it doesn't matter really what we label it, because rebates can mean a lot of different things. What we really want is for the accounting to be reflective of what's happening, not necessarily what you call it, which could happen a lot with rebates, could happen also a lot with credits, like we talked about last week, right? So this almost is like, I agree it applies here. So I mean, I agree with your recommendation, but it could be more broad in the way we end up having the words to describe circumstances, not so much labels of rebates, credits, even refunds, although maybe that one's a little more clear, but I'm thinking about that correct, right? Okay. I agree with the recommendation here with substance over form of what you call a rebate. Jeff.
I'll follow because I think I put the same term in my remarks, substance over form. So I think the staff was pretty smart recognizing we were going to be up against a lunch hour constraint, because I think some of the comparisons of 1, 2, and 3 on the bottom of page 20, some of those are pretty thorny in my view. And what is a rebate? And I think by the nature of the questions that are being asked, I'm avoiding that fate because there are future papers coming. so we don't have to discuss that and we wouldn't make it to lunch in time. So as it relates to the individually assessed question, I think, yes, I do think there's going to be some detail there. There's going to be some complexity there. We're going to have to deal with that as best we can, but I don't have an alternative for doing that, right?
Right. It's a little bit like the discussion that we had about price concessions and discounts and credits. How are the three different? But they have a similar treatment. So we have to use those words and said this describes circumstances in which a government, yada, 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 and then roll into the accounting treatment, because we have to use the words that people are familiar. We can't really define them, because if we start coming up with definitions, they're mutually exclusive. God almighty, we're never going to get out of this place. But then narrate what it means and then venture into the accounting treatment to help people get to the substance over form. Like we noted in the paper, the implementation guide question is written as very absolute. Rebates are, and that has caused trouble.
Yeah, I mean, and I think, so to answer question 5, I agree, we treat it that way. All decisions are tentative, right? As we get these subsequent papers, what I was trying to do as I was reading this paper is compare and contrast, right? And sort of say, how would I treat that? How is this in relation to that? I can't do that yet because those proposals are forthcoming, right? So all I can do is say, I'm at where I'm at, and let's see where I'm at when I have to look at these other instances.
Sure, that's fair. Thanks, Jeff. Jackie?
I also agreed with the staff recommendation. It's obvious that rebates take on many flavors and forms, so trying to define it would be impossible, I think. So I think the approach that look at what it's trying to do and then find the proper home for it makes good sense.
Thanks, Jackie. Carolyn?
And I also agree with the staff recommendation. You have to do that analysis to determine what it is you're dealing with, and then you could go from there.
Thanks, Carolyn. Chris?
I agree with the recommendation.
Thanks, Chris. Robert?
I agree with the recommendation.
Thanks, Robert. Diane?
I agree with the recommendation. State legislators like to throw around terms like rebates and call all kinds of things that, so, which I've seen those. So this is the right approach.
No doubt, Diane. And if we tried to define it, they would try to circumvent it. They'd try to use it in some way, right? So somewhat. So, I think I agreed earlier, but if I didn't, I agree here too. Jeff said he answered question 5, which I guess he did, but we haven't asked question 5. So.
So that does bring us to board discussion question number 5. Does the board believe that if a rebate is in a revenue transaction functions like a refund, the proposals in the prior section should be applicable, and the project staff recommends this approach?
Thanks, Brett. Jeff agrees. Diane?
I agree. We love consistency.
Thanks, Diane. Robert?
Agreed.
Thanks, Robert. Chris?
I agree.
Thanks, Chris. Carolyn?
I agree also.
Thanks, Carolyn. Jackie?
I also agree that it should be treated as a revenue transaction functions if it's like a rebate.
Yeah, I agree as well. This just follows the logic of form over substance, and this is the form it takes. Similar to a refund, it should have similar accounting. So we made it through.
Yes, we seem to have made it through. Just to look forward to the October meeting, we're planning on bringing to the board some open issues that are remaining related to recognition, as well as topics related to measurement. We're planning on bringing papers related to non-cash consideration, consideration based on an index, consideration provided by a customer, just some topics kind of centering on that common theme.
Sounds exciting. Look forward to those.
Very much.
That'll be another good discussion. So I guess technically the board meeting itself is done for the day, and we'll pick back up tomorrow morning at 9 a.m. where we'll talk about subsequent events and then infrastructure. But We do have a public forum, which I guess is kind of a version of a meeting of the board, but not the technical board meeting, but a public forum related to our going concern project or severe financial stress probable dissolution disclosure PV. And so we'll have some guests with us for that 1 p.m. start. So let's take our 33 minutes for lunch and try to start back at 1 o'clock with the public forum. See everybody then.